Gamma Irons, how you can profit from non-directional trades. My name is Don Kaufman, and you are watching a TheoTrade presentation. A risk disclosure, we're not financial advisors nor a broker-dealer. I spent a huge amount of my career in the brokerage business, which we'll talk about here momentarily. But I'm out, people. I'm out of the contest. I am no longer on the brokerage side of the business, and I am thrilled about it after 15 years running a division of a brokerage company. I have been on the outside now for about 5 years. With that, copyright disclaimer. This is ours. This is not yours. This is, again, a TheoTrade presentation. One quick thing I always like to mention up here, one of the primary things I like to mention on this particular slide, deals with not only where we're located. So our offices here at TheoTrade are right there in North Scottsdale, obviously Scottsdale, Arizona. We haven't been there in a long time. We haven't been back to our office since late February. I hear it's wonderful this time of the year. I actually drove by the other day. Absolutely nobody there. But the reason I throw this up here, support at TheoTrade.com. If you ever have to get a hold of me, okay, that is what we use is called a common inbox. Just put Don in the heading. Okay, and support at TheoTrade.com. We kind of pride ourselves on answering literally hundreds and hundreds of emails every single day. So with that, again, it's important that you know that you can contact me or anybody here at TheoTrade. Support at TheoTrade.com. All right, let's get down to it. This is why you're here. You know, I always say this whenever I do any kind of webcast here. What's important to me is that you have a very definitive knowledge set that you can take away and you can start to use tomorrow. And there's a couple of key points that I'm going to hit. And I hope that's all right with you because as I said a moment ago, I'm going to fire at you pretty good tonight. And for those of you that are a little newer, that's all right. I want you to be able to grasp big chunks of logic, right? So some of the stuff's going to be a little overwhelming. It's okay. Again, if you're going to learn something, okay, you have to have some new concepts thrown at you. And that's exactly what we are going to do this evening. So again, by the end of the webcast, I want you to walk away with a couple of details over here. Number one, how you can use some of my favorite market instruments to profit from changes in market volatility so that you're just not just about a directional trader. And I stress this, people just focus on right there. What's the market going to do? What's it going to do? What's it going to do? We're actually going to look at a non-directional strategy, and it's a non-directional strategy that is absolutely in play right now. Number two, discover volatility ranking. So we're going to talk about vol ranking tonight, how to use the tool to really set up some potential trades, potential profits out there. So volatility ranking is a critical aspect this evening. Number three, learn to take directional bias out of the marketplace. Okay, use the power of volatility to your advantage. When I'm talking about directional bias, I don't want to be misinterpreted here. I'm an anti-chartite. Listen, I am much more of a quantitative trader. If you guys have never heard that phrase before, okay, I'm a quant. I admit that I'm a quant. What does that mean? Everything for me is about probabilities. It is about mathematics. That doesn't necessarily, imply that you have to understand the mathematics behind it. But when I like to look at trades, it's less about what I think and more about, okay, what I know. Where can I find some definitive edge? And we're going to talk about definitive edge. Number four here, the logic and strategic formula behind what we term is gamma irons. We're actually going to explain what a gamma iron happens to be, okay? So you understand why these trades are working right now. I mean, this is the in-play strategy for today's marketplace. And people are, well, the market's going to change. The market's always changing. That's fantastic, okay? Gamma irons, all right, for months now have just been a phenomenal position to put yourself in. Now, before we go too far, our gift to you. Stay tuned and stay with me right until the end of the webcast. And we're going to give you the SPX expected move indicator. I'll explain what that is here momentarily, but listen, people, there's an indicator that you're going to see used multiple times this evening. Okay? I am of the belief that if I'm going to show the indicator, okay, that we have to provide that indicator to you. The indicator itself is a $497 value. We will provide, okay, a link to that indicator right at the end of tonight's webcast. I'm going to explain right now briefly what the indicator is, but you're going to see this indicator, okay, in action throughout the course of the evening. And again, I don't like when people kind of like, here's an indicator, and then they're going to charge you $500. We're giving you a $500 indicator. The SPX indicator, it is literally 3 full years. It's really getting close to 4 years now of weekly expected moves. It's Don Kaufman, that's me. I did all of these by hand. It's hand calculated expected moves, and it is an indicator that has literally changed the way that we view markets. And what this indicator is, and you're actually looking at a screenshot of it, but what this particular indicator is, and I'll display it to you. This is this week, okay? That's this week, and there's these 3 lines right there, okay? What those 3 lines represent, it's the options marketplace. And the options marketplace, and people don't realize this, options, okay, are good for a week. And by the way, options, I know, not everybody knows their options. I said the O word, right? I said the O word. What do you think gamma irons are? But I said the word options, okay? Options. You might have options for a week. You can have options for 2 weeks. There's options for months. There's options for years. But if you have an option for a week, what does an option for a week really do? It handicaps what the marketplace is likely to do the next week. Most people don't view it that way. That's what an options marketplace is. Okay, so this is taking the options market and actually making it applicable directly to a chart. So what the indicator actually does, see that? It's a highlighted candle. See that? It's a highlighted candle and a highlighted candle and a highlighted candle and huge highlights. You know what that is? That's the options market. It's wrong. It's wrong. It's wrong. It's wrong. Okay? It's absolutely wrong. Wrong, wrong, wrong. What this indicator, okay, does is it defines efficiency, okay, or lack thereof. It actually literally displays markets that are efficient or markets that are, if you will, inefficient. And it's going to be a big portion of tonight's session. So I'll come back to that a little bit later because you're going to see it throughout the course of the evening. So don't be too flustered just yet. So a little housekeeping item before we roll deeply into this. And here's the housekeeping. Listen, this is a skill set. Okay, I suggest you pay attention because I'm going to move, as I said, at a fairly good clip. I like to challenge people. Some of you have had absolutely no experience in the marketplace, and some of you have had a ton of experience. I'm just kind of curious, how many people that are joining us this evening, okay, we've got quite the number on tonight, how many people joining us this evening have actually traded some options? Just put a Y for yes, the N for no, okay? If you haven't, it's fine, okay? But I need a feeling of how many people here, because when I say there's a little housekeeping item and you should kind of pay attention, all right, I'm just getting a feel right now that, by the way, I haven't gotten one no yet in here, which, there's like 700 people on, I got my first no. David, thank you for being honest, okay? Anyway, we got a second no. So, all right, I'll tell you what, we'll keep this at a pretty good clip. By the way, if you have no options experience whatsoever, okay, I am going to cover briefly the basics. As I said, if you have no options experience, hang on, latch onto as best you can. You want to grab, if you have no options experience, you want to grab big strokes of logic. You'll understand what that means here in a minute. If you have options experience, for you, we're actually going to go into some very finite details this evening. So housekeeping, I say shut the door, turn off Skype, chat, whatever else is distracting you. Close Facebook. Oh, come on. It's a worthless company. It's a worthless company that's worth like what? What's 500 billion amongst friends? Put your phones on silent mode. Kick out kids. Oh, please kick out kids. Listen, I have 3 of them. Okay? 3 of them. I would much prefer doing these webinars every single night, people. There's 3 kids. Right now, there is no school. We're in Arizona. Okay? They're there all the time, watching, waiting. Anyway, kick out the kids if you got them. You took the time to be here. This is important. Focus on being here. All right, a little bit about me. So again, my name is Don Kaufman, and there's a picture of me a couple of years back. I watched order flow for 15 years. That is a very large part of why I'm here. A lot of people don't even know what that means. They're like, he watched order flow. What does that mean? I'm actually going to explain a little bit about that. So my background, I grew up around traders. I had family that traded in the markets all the way back in the 1970s. My uncle started a big trading firm. The trading firm was was really kind of hailed as one of the greatest trading firms ever. The firm is out of Chicago. It was called O'Connor and Associates. He semi-retired in the early 80s, but he went on to sell the firm in 1992. It was a multi-billion-dollar deal. He actually sold his company to the Swiss bank, which ultimately became UBS Warburg, yada, yada, yada. A couple of years thereafter, I actually started trading in the late 90s. And the reason I started trading is just interest. I mean, listen, I didn't do a degree in finance. You know, people always ask me, like, you have a degree from like Wharton? No, okay? I have a degree, okay, in molecular genetics. You want fries with that? And I was just always interested in trading. Why? Okay, I'll be very frank with you. Because as a kid, I would visit Paradise Valley in Arizona. If you don't know Paradise Valley, it's one of the most expensive zip codes in the entire world. I'd visit, and it was always, it's always nice to have an uncle that's a billionaire. People always ask, they give you money? No. Do you have an uncle that ever gives you money? Absolutely not. But it interested me. And I had a cousin that was trading, and I started working for him 3 weeks out of college, and the rest is kind of history. So I started working for him, and I was down on the floor for a while. They moved me up as a risk manager. Then I actually met some guys from the floor, and they asked me to join their firm, and that firm was called Thinkorswim. And I stayed with Thinkorswim and built their entire education division of Thinkorswim. So I was with Thinkorswim from about age 24 all the way until, just a couple of years ago. So I exited not only Thinkorswim, but TD Ameritrade. I was with Thinkorswim. I was on the executive management team. We took the company public in 2007. 2009, TD Ameritrade acquired us, and in 2015, I exited the firm. At the time, I was actually running all of education for TD Ameritrade, and at TD Ameritrade at that time, we actually had 7 million clients. So there were actually 7 million traders there. And again, I ran the entire education division for that, which accounted for over 700 individuals in that particular in our organization at that particular point in time. And one of the things that I was afforded to be able to do while working both at Thinkorswim and TD Ameritrade, I got to watch flow. That basically means I had access to everything you did. And if you're unfamiliar with this, we had access to what's called a full big data team. And we analyzed your data in every way, shape, or form. I know everything about every habit of retail traders. Okay, we studied trades. We know what works, what doesn't. Okay, who was making money, who wasn't. If you bought an iron condor or sold an iron condor, if you did a covered call, I'm telling you right now, what we learned from that was we're literally watching billions in other people's mistakes. But more importantly, we're able to zero in on what worked. Okay, and most of that big data, we never were able to use at TD Ameritrade. And I'll tell you why we weren't able to use it. Because of regulators. And it drove us absolutely nuts at the time because the regulators said, you can't say that. Okay, so eventually, several of us packed up, left 2015, and we launched TheoTrade. That's a little background about me. Over the years, I still do media appearances, but I do the media appearances from my home now. This is actually look at this. It's a year ago almost to the day. I was actually in Chicago. That's in studio. This is the TD Ameritrade TV network. I also do CNBC. I'm not too biased here, but I'll do CNBC from time to time. This is a memorable one because it's myself versus the great shark himself, Kevin O'Leary. So it's a little bit about me. Let's get down to it. Embrace the chaos, people. What is the chaos right now? Chaos is markets are all-time high. All-time high. Listen, if I told you that 6 months ago, like 6 months ago to the day, you'd have laughed in my face. Markets will be at all-time high. The Fed is going to step in and save the world. By the way, today the Fed actually took one big step back. Okay, you don't know what's about to come. We're hearing about like record numbers of evictions. People are not paying their mortgages. It's just complete chaos. There's an election coming on. You got to sum all that up. Volatility is a very good thing. Volatility is good, always has been, okay, for those that understand trade. That's one thing that's difficult for a lot of people to kind of accept. And when I talk about volatility, yeah, we'll talk a little bit about the VIX, but we're going to explain precisely what volatility is. More appropriately, tonight, I'm actually going to talk a bit about outliers. What is an outlier? I'm going to explain that. And you thought being an outlier was a bad thing, okay? if you're the sheep in the family, it's that's all right. It's you're a little bit of an outlier. Outlier is going to be a very, very good thing. So markets lately have been a little bit of extreme. And one thing I would like to show you is what's possible in the extreme. And I start with this evening because I want to show you, for the most part, just the last couple of months of action inside of the marketplace. What I did is I took 3 separate periods of time, just displaying all 3 periods of time. This is actually February, towards the end of February, towards the end of March, and of course towards the end of July. In a few weeks, I'll show you towards the end of August. Okay, but people want to know what's possible in a relatively extreme marketplace. By the way, this is a screenshot. Okay, this is a screenshot, and this is what they call a 5-day net lick, which is a net liquidating value. And the way that a net liquidating value works, it's a little backwards, it's a little weird to look at, right? So here we are on February 23rd with 211,000. By the end of that week, I was up to 248,000. Okay. In March, I was at 305,000. By the end of March, I was at 308,000. That's just a 5-day window. And of course, the 5 days leading up to the end of July. Whoops, sorry about that. To the end of July. This is, by the way, this account is my IRA. The IRA in July had 392,000. End of the week, roughly at 392,000. Although I think this was a Saturday, a Sunday, or maybe a Friday, a Saturday, a Sunday, a Monday, a Tuesday. This had to be a Friday, Saturday, Sunday because those values are the same for 3 days. Nevertheless, I just wanted to show you what's possible in the extreme. And people are looking for ridiculous numbers. I'm going to tell you, you're not going to get ridiculous numbers here. This is an IRA. This is my retirement account. Okay. I'm not here to people are like, you should have turned 100 because you always listen to advertising. I turned 100 grand into millions, or somebody's like, I have $10,000 into $1 million. Really? I'd like to see you do that in your IRA because these returns inside of an IRA, that's real. And I'll tell you what, for me, it's phenomenal. And I've been in this business for 22 years. And I got to tell you something about returns and trading. Listen, the buck stops here. Okay. You're not going to get any crap and stuff. I worked at the brokerage firm for 15 years, okay? You want what's real? Everything I take from my account, a screenshot, all the trades, everything you're going to see was all done inside of an IRA. I don't show you anything that cannot be done inside of a retirement account, and I do that, okay, specifically because I recognize that people, they trade in a retirement account, or they might be trading with a $2,000 account in any position that I talk about tonight. Could be done, okay, with as little as $2,000. And the $2,000 marker is important. That's not my rule. That's not, TD Ameritrade's rule or E-Trade's rule or Robinhood's rule, okay? That's actually a SEC and FINRA rule. All right, with that, if you're looking at this and thinking, what kind of trades did I use? I'm going to show you exactly that. Predominantly what I did, okay, to generate big returns from the period of the onset pretty much of the corona crisis to right now, everything that I've been doing and everything I've been focusing on, quite frankly, has been about the outlier. And it's exactly what we're going to talk about tonight. It's been about the outlier. This, by the way, this is a screenshot specifically from the Thinkorswim platform. Okay. By the way, my allegiance to Thinkorswim is only because I worked there. I only took screenshots from here because I worked there for 15 years. Like obviously, I know the platform well, but we also work with Tasty. We work with E-Trade. All right. We have, again, all of these brokerage firms we're extraordinarily close to. So with that, here's TLT is a back spread. The day that I put it on, I'm only showing you recent stuff, right? What is a back spread? The bottom line is back spread. It's an outlier type trade. It's looking for a wild and unforeseen move in the marketplace. Okay, and we're going to talk about outliers here momentarily. I just want you to see things like I put this trade on for a 25-cent credit. I took it off for a $2 credit. It's not important at this point that you grasp the concept. I just want you to get used to seeing I put this trade on June 5th, took it off June 11th, the credit, okay, and another credit. So what did I actually make on here? 235, which equates to, if I did one contract, I made $235. If I had 10 contracts, I made $2,350, right? Moving on. And I just wanted to, to equate that. Here's the EEM. The reason I'm showing you also a couple of these trades, like the EEM. The EEM, what is it? It's less than a $40 product. Anybody can trade this. If you have $2,000, obviously you could do this trade. I put it on for an 18-cent credit and returned, okay, over a $1.07 credit. Again, an outlier. What was I looking for? A wicked move to the upside in this particular trade, and I got it. This one took almost a full month. All right, next trade up, because you want to see where returns are coming from. This one's actually XLF. I apologize. It's back in May. It's, okay, June, July, August. I'm going to show you a couple of trades. I'm going to show you a lot of trades actually in August. But this one is actually in May. I put it on for 0, which is called even money. Exited it for a 51-cent credit. And again, the point of me showing you this is a $20 product. Like, it's not exactly like a huge mover or shaker, right? The next one is also in the XLF, okay? And I did the exact same trade. Like, by the way, if stuff works, do more of it, right? So you'll see me trade the XLF again and again. But if stuff works, do more of it. That's a whopping what? June 1st, out June 3rd, put it on for a 25-cent credit, took it off for an additional 26-cent credit. What did I make on that one? 50 cents. 50 cents on a $23 product ain't half bad in what? A 2-day period out there. By the way, all the trades that I'm showing you here are done live, and they're done live in front of TheoTrade clientele. Okay, XLF back ratio was a winner. Don, new here. XLF and Baidu back ratios, batting 1,000. Closed my XLF. Thanks, Dom. Got out of XLF at 204. This guy Randall actually beat me on that one. Here's one in the XLE. Again, the only point that I'm showing you over here is initially, these are all $40 products, $20 products. Put this one on for a 5-cent debit. It closed it for $1.35. That was also, okay, June 2nd to June 5th, outlier type trade. Moving on. Here's a fun one. Nobody ever shows this, right? This is actually a losing trade. I'm showing you a losing trade. You're going to appreciate this. It's a losing trade. The trade was actually put on initially, okay, for a $2 credit. And I'm going to show you, by the way, first I'm showing you the trades, then I'm actually going to show you why I put these trades on. Put the trade on for a $2 credit. Then I had to buy it back for a small debit. So instead of keeping the $2 credit, I had to basically pay, let's call it 40 cents. Okay, so I still ended up making $1.60 on the trade, but I was wrong. This is actually a put, okay, back spread, meaning I was looking for this stock Roku to go down. The stock didn't go down. The Roku shot straight through the roof. I just wanted to show you what a losing trade looked like on an outlier type event. It's not a half bad thing. I still made money on it. I just didn't make what I anticipated to make. Okay. Next one, Microsoft. This one, again, we're getting a little bit more recent here. Open June 3rd, closed June 23rd, 76-cent credit. I closed this one for a $5.40 credit. People, that's a grand slam home run in Microsoft. Quick trade to the upside. This one I also took, of course. All these trades were done live, but just showing you John out for 550. Omar exited for 587. I just wanted to also display. Look, I got out at 540. This gentleman actually beat me at 587. This gentleman beat me at 550. Okay. This gentleman was just, out in staggered out of it. Jerg. Okay. Wiggled out of two in the $200 to $300 range. Worked like a charm. Okay. This is also an outlier event trade. This one's a little bit different. You know what's interesting about this one? This is an intraday trade. It's an intraday trade. Literally, we were in, okay, and we were out in the exact same day. We paid 88 cents to only exit this thing for $7.17. Every $88 I invested, I got back 717. It's 715% return for ultimately a few hours in that particular position. And again, reiterating, okay, Max, thank you. Okay, sold SPY 737, absolute home run. These are actually trades that were literally being done that particular day. And get your Don dollars here, okay? Again, these are types of trades that we have been doing lately. But tonight, again, I want to kind of key into everything I'm talking about right now are outlier events. You can kind of, the summation of the marketplace right now is just that. News and everything right now is outlier event after outlier event. And to kind of reiterate that, and again, and when I say it like in summation, the types of trades that we're doing right now, okay, whether you're looking at intraday trades or whether you're looking at these back spreads over here, and in a moment you're going to be looking at gamma irons, they're looking for, when we say outlier, okay, oddball type events. By the way, people always ask, what do you do after, you take profit out of all these trades? Well, I can't go anywhere, so I built this in the house. This is actually a gym that closed down near my home. I turned around and bought all of the equipment from that gym, predominantly from outlier type trades that were done in a non-IRA account. But don't worry. By the way, apologize for the picture over here. They were getting ready to paint they're getting ready to paint the walls. We had to move the equipment in first though because the gym had to shut down in very short order, and my children have been traumatized because it's the end of the basketball court as they know it. These trades have been wicked consistent. Here's the QQQ back spread, put on 52 cents, closed for 233. People, it just goes on and on. These are the trades you got to learn right now. This is what our members are saying. Hey guys, new member, been lurking in chat for about a month. Okay, with short SPY at TheoTrade is the only membership I've ever had that pays for itself. Okay, Brett W, you won't find a more supportive, more profitable room anywhere in the retail business. And Ali, Don, help me pay for a year of TheoTrade subscription with the QQQ. Let's get down to it. Let's actually define, okay, a little bit of what an outlier event happens to be, what it kind of means. All right, getting to kind of know what an outlier is. So you kind of know it's a bit of an oddball, right? I think that's what most people think of, like, it's an oddball. We're going to get into a little bit of the math of it, okay? What are outlier moves in markets? Like, how does that pertain to the markets? More appropriately, though, how can you find these moves with consistency? And then obviously, how do you profit from them? So we start with a really simple idea here tonight, and that is volatility equals risk, okay? So we have to do a very, very brief, kind of dirty discussion here about volatility and risk to understand how, not only what an outlier move is, but how to actually profit from it. Okay, so I wanted to back you into this, and I wanted to show you just trade after trade after trade after trade after trade that is hitting these outlier moves. By the way, that wasn't the only trade. Again, tonight we're going to be talking about the gamma iron. We got to hit volatility and risk though. So option markets think of them as putting a price tag on risk. Okay, because some people don't even know what options markets happens to even be, but pricing in markets is determined via market participants. Ultimately, options pricing comes down to supply and demand. So listen, here's kind of a cool way to think about options and so forth. I guess one of the questions I have for you guys, all right, what's a really risky stock right now that you can think of? Okay, what's a really, really risky stock right now that everybody can think of? We're going to make this an interactive session tonight, right? Anybody? Risky stock, come on, what's some risky stocks? Throw them out there. Okay, I'm not moving on. This is awesome. All right, I asked that question. I kid you not. The first 11 answers are Tesla. Hey, Roku made the list. Somebody said Amazon, all right. Anything to do with airlines? I tend to agree with that one. What's the more risky thing? Getting on the airplane or trading its stock? I'm going with getting on the airplane. I'm not doing it. Okay. Biomedical stocks, totally. I agree. Carnival. Okay. Carnival isn't risky. Okay. The cruise is risky. Well, when you think of like risky, and risky stocks, and you can have a stock, and let's say that stock, whatever it happens to be. I mean, we'll use Tesla in a minute. I put a Tesla example in here. I don't want to ruin that one, but it doesn't matter what it is. You have a stock, and that stock is trading right around $200. And instead of buying the stock, people go out and they buy what's called a 200 call. And the 200 call, let's say the 200 call is good for 1 month. Now, people that are brand new to options, if you're brand new to options, like this is a foreign language to you, right? What's a 200 call? I'll tell you what a 200 call is. 200 call gives you the right to buy the stock at 200. What's a 200 call give you the right to do? Buy the stock at 200. Why would I want the right to buy the stock at 200? Because the stock could go from 200 to 220. And if the stock goes from 200 to 220, I have the right to buy the stock at 200. Everybody else has to pay what? 220, right? But you got to pay something for that right. Why do you have to pay something? Because there's time. And in that time, okay, there's what? It's the possibility of stock movement, appreciation of the stock. Let's say the 200 call costs us $5. You're like, ooh, $5, $5, $5, $5. The 200 call is going to be trading for $5. You're like, that seems kind of expensive. Yeah, no kidding. You want to know why this $5 option is so expensive? Because everybody is trading this stock. Okay, this stock could be the next Netflix. This stock could be the next Nvidia. You don't know, but all you do know is that that option is expensive. And whenever I ask somebody about options pricing, and all I want you guys to be able to gather in this example, seriously, all I want you to be able to gather in this example is, how does the market derive $5? Okay, how does the market derive $5 for this 200 call? So the 200 call is easy, gives the right to buy the stock at 200, but it's why is it trading for $5? That's the question mark. And people go, well, it comes down, Don, to the Black-Scholes model, because Fisher-Black and Myron-Scholes, yada, 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 that crap doesn't matter. The Black-Scholes model doesn't price options. I'll tell you what prices options. In the end, supply and demand. Options price just like stock prices. If everybody in the world wants to buy a stock, what do we call it? Tesla. But if everybody in the world wants to buy the stock goes flying higher. Same is true of the option market. If everybody's like, I need me one of them calls, okay? It's supply and demand. If everybody's buying calls, price of the options are going to go through the roof. But if the stock is moving around a lot, people trade a lot of options in it. Listen, high risk equates to higher option pricing. Low risk, low option pricing. What's a low risk stock? Think of a low risk stock. You something like Walmart, stock with a nail in its foot, okay? 124, 124. Is there any buyers at 124? No. Oh, wake up. Walmart would be something that would be less risk. It's not riskless. There's nothing that's riskless. I think everybody realizes that these days, unless, of course, the Fed buys it, in which case it might actually be riskless, but it pays you nothing as well. So the 200 calls trading for $5 is good for a month. Okay. What's the overall volatility been lately in the markets? Okay. What's it been lately in the markets? Some people actually know what is termed the VIX. What is the VIX? It's the S&P 500 Volatility Index. The VIX lately has been north, okay, of 20 for a sustained period of time. In fact, the VIX has been north of 20, okay, right now, longer than at any point since the financial crisis. Interesting, right? Market sees something out there. But all of this is like for what? What's this stuff good for? I'm going to show you what it's good for, okay? Because in the end, to understand like volatility, you got to understand what's going on this slide, okay? This slide. I just took you through a couple things here. I'm just clicking through. What I want you to see is this. Here is a stock. And by the way, let's make it official. Anytime I talk about a stock, I never call it a stock. I call it stock. And stock is trading at 100. I'm telling you, one of these days, I'm going to take another company public, and we're going to have to use the symbol stock, right? So stock is trading at $100. So if stock's trading at $100 and has a 20% volatility, what does it really mean? That's the one thing when I ask, like, what does 20% volatility mean? People give me a deer in the headlights, okay? So they just totally deer in the headlight me when I say, what's 20%? What it really means, okay? Volatility is standard deviation. Now, this is where I don't want to geek out on you. I just don't, because you know what? There's no reason to totally geek out on you. What I want you to do is understand this crap, okay? All I want you to see when it's standard deviation, it just simply means that that stock, whatever stock it is, okay, can go up 20% or down 20%. I mean, listen, this is a distribution curve, and everything you do in your life can fit in one of these curves. I mean, literally everything you can do in your life can fit in one of these curves. It's area under the curve. We must knock down the curve. Oh, this is crap that you've heard way too much in the last 6 months. But I always use the analogy. There's really, really good drivers, and there's really, really bad drivers. That's a place we called LA. But most of us fit into the center or the meat of the curve. Who fits into the meat of the curve? 68% of the population. But you see, the funny thing is about driving, Did I pick on LA there? Yeah, it happened. Okay. The funny thing is about driving, everybody thinks that everybody's a horrible driver, which makes most of us, okay, a pretty good driver. you know, and people are scared of like self-driving cars. I have one. Let me tell you, it does a hell of a lot better the job than most people do. Um, we'll come back to Tesla in a second. But what I wanted to show you here is a very simple context that 68% of things happen in what's termed one standard deviation. It means when you say a volatility of 20%, it means that this stock is supposed to move up 20 bucks or down 20 bucks. And it's supposed to stay in that range 68% of the time. And the 68% of the time is what throws everybody. That's what we call normal. That's what we call a standard deviation. It's like a very normal occurrence. So when volatility is quoted and says 20%, okay, what 20% really means, it says normally we're supposed to move up 20 bucks or down 20 bucks. That's it. That's what it means. Okay? But there's a problem with all this. You see these $20 moves? Those are good for 1 year. Well, who cares what you're going to do by the end of the year? When people look at the VIX, okay, you know what the VIX is right now? The VIX is somewhere around 21 or 22. You know what that means? A 21 VIX? It means the S&P 500 is literally supposed to move up 20, okay, or down 20%, right, and stay in that range 68% of the time. That's an intimidating number. But the point of me saying, why did I mention 1 year? Listen, if you know that the volatility is good for 1 year, could you take the 1 year and divide that 1 year, okay, and figure out how far the stock could move, okay, within 1 month of time? Of course you could. Could you figure out how far this stock could move within 1 week? Of course you could. That is what we term EM. Remember that. EM. What does EM stand for? Expected move, people. Expected move. And there's a whole calculation for this. You take the volatility, which is 20%, okay, and you multiply it by the stock price, which is roughly 100, okay, and multiply that, okay, by the number of days left to expiration. Let's say that there's a week left to expiration, which is 7, and the square root of that divided by the square root of 365, and gosh darn it, that actually will come out and give you an exact expected move. And that's how it's done, okay? And that is not meant to blow your mind. I just want you to know that what the options market is really doing, and this is what people don't get, the options market is really doing, it's handicapping risk of the stock price movement. I'm going to say that again. What's the option market really doing? Handicapping stock price move risk, right? This is what it looks like. So this is a screenshot. I took this screenshot, okay, very recently, today. And Tesla was moving all over the place today. I took the screenshot earlier in the day. It doesn't matter. Oh, it's hard to borrow. The point that I'm making here, with 2 days left, Tesla is slated to move, okay, $94. You're like, that's a lot. Yeah, but it's almost a $2,000 product. You want to see something crazy? Craziest thing is this. It's $2,000 stock, but the volatility is so high. Look 150 days out. 150 days out, stock is priced to move almost $1,000. There's actually, okay, Tesla's such a high volatility that actually almost breaks the model. A year out, they're saying that Tesla could be 0 or it could ultimately be close to 4,000. Think about that for a second. That's what the expected move says right there. It's an $1,800 expected move on almost an $1,800 stock. I'm just rounding it to 4,000. But I wanted you to see this, and I'll tell you why I want you to see this. I want you to see this because if you have 2 days left or 16 days left or 30 days left, don't you think that this is important? And when I say this is important, what's important, Don? The marketplace is telling you. The options market is telling you what the stock is supposed to move. And you go, is that right? Yeah, it's right. This is one of the most studied areas of the entire marketplace, and people just seldom use it. They don't get it. They don't get, okay, how can you actually use these numbers? That's what we're going to get into. Now, this is kind of a number geek way, right? When you look at this, you're like $94 and $204, and you're like, it's too much. This is the way that you might more appropriately understand this, okay? What these 3 lines are okay? That's the expected move plotted on a chart. And look what happened this week, okay? We were only supposed to move up here or down here. And when I say here, here being what? 1762 or down to 1539. But we didn't. When I took this screenshot, we were basically at 1900. We did what? We ripped through the expected move. The options marketplace has gotten it wrong. The options marketplace got it wrong the week before. And the options marketplace, oh, look, check it, got it right, check it, got it right, check it, got it right, check it, got it right. It's wrong. It's hideously wrong. It's wrong. Okay, the point that I'm making, every circle drawn on this screen is a huge opportunity. They're outliers. Why? Think about this in context. The option market, okay, and I just want to make this clear. The option market, for instance, says you're supposed to move up or down, let's say $200 in a week. It doesn't move $200. This week, it moves what? $300. Do you know how much edge is in here? Okay? It's nothing but edge. That's the kind of thing we're going to show you here tonight. Are we okay so far? Because this is where sometimes the little hamster gets stuck in the wheel at this point, which is okay. Because I'm going to really define what this kind of means as we go along. All right. Because it's important, because like to see it visually, I think makes a hell of a lot more sense to see it visually. This, in my mind, makes sense. Okay? Trust me when I say you do not want to get into my mind. Especially after being quarantined for like 6 months with 3 children. Okay? You don't want to be in my mind. Here, it makes a lot more sense to see it visually. It says, the option marketplace, it's not often that you say something like this. It's wrong. And you know it's wrong because it's visually showing you it was wrong. Now, by the way, I don't trade Tesla all that much. I really don't. The last major Tesla trade that I did, okay, it was almost a year ago. It was actually November 26th of 2019. I put myself into an outlier type trade. This is a volatility backspread, and I put it on for a 20-cent debit, and I made $11. What that basically means, if you went out and did like one contract of it, you're making, that's kind of a light color on there. So I'll make this easier for you to see. You're basically making, all right, on one contract, $1,100. You do 10 contracts, $11,000. Okay, I did rather well on this particular trade, and on the advice of a gentleman that is also the co-founder of TheoTrade. So I had a really, really good Tesla volatility backspread, and he told me, he's like, you should go out, you should buy a Tesla right now. So I did. and then you don't get him with the Tesla. Okay, that's the trouble right there. That's trouble. He comes with every Tesla comes with a Zach, and that's my youngest. He's 5. It's dangerous. Okay. By the way, you can actually drive the car with the child sitting in the driver's seat. Don't worry about it. It's part of the autonomous thing, but it's kind of what we call putting your account into a ludicrous mode. I will say this: if you have the means, okay, to buy a Tesla, okay. I sold almost everything else I've ever had in terms of vehicles. There is nothing like that car. And I'm telling you guys, for those of you that are car enthusiasts, I have owned everything. You name it, and I've probably owned it, and I'm serious about that. That little car thing going on for a while. But there's nothing like it. It's very nice. He has his car seat now in the back. He enjoys it. This is expected moves through time. Okay, and what it basically is, it's just a standard distribution curve, and I just want you to visualize this. Okay, the more time we have, the further the stock is capable of moving. Now, let's kind of get down to business in here. Okay, getting down to business is know your volatility. Listen, there's 2 types of volatility you got to understand. There's implied volatility and historical volatility. So what I want you to understand in this example, okay, is we have what we term the implied volatility. And implied volatility could be represented as the EM, which again is what? Expected move. You could say the expected move says the stock, and I'll just round this, is supposed to move plus or minus, let's say, $10. So if expected move says we're supposed to move $10, what does that look like? Like visually, it looks like this, okay? The stock's trading at 100. It's supposed to go up to 110 or down to 90, okay? And it's supposed to stay in that range 68% of the time. That's what the implied volatility is saying. It's supposed to move plus or minus $10. And I'm going to tell you right now, there's no directional bias to expected move. There's never directional bias to expected move because the marketplace doesn't know what it wants to do. That's what's cool about options. Then you have what they call historical volatility. The way to think of historical volatility is actual stock price movement. It's how much is the stock moving? How much is the stock moving? The stock's moving a lot or a little. And guess what? You compare the two. Historical volatility and implied volatility. Implied volatility, implications to the future. Historical volatility, looking at the past. But the cool thing is you can actually say we were supposed to move 10 bucks. How much did we actually move? The answer, 25. Is there edge in there? That's the kind of crap we have to understand. Okay? That's what we're actually going to look at. So expected moves and auto-expected moves, they can visually display a stock or ETF smashing through the market's expected. In other words, you can see a stock moving beyond what the options market has priced movement to be. Again, whenever I throw like a slide up like this, you're like, yada, yada, yada. Wake up! Here, look, okay? This is the yada, 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 but you yada, yada over the best part. No, I mentioned the BISC, but I wanted you to see this is the QQQ. In fact, I'm going to build a couple of trades in the QQQ. In the QQQ, let's not worry about right here in the Qs, that's the Corona crash. Don't even worry about it. Seriously, the crash was crazy, man. It's totally crazy. Let's not worry about that. Let's worry about right now. What do you see in the QQQ? There's a breach. There's a breach to the downside, a breach to the upside, a breach. Okay, a breach. What does a breach mean? It means I'm just ripping through the expected move, people. Okay, these are minor breaches. But every one of these breaches, well, by the way, this is today. We're right ready to breach the upside. Pop goes the weasel. Anyway, every one of those breaches, okay, is an opportunity. Here's your edge. What if the markets continually move big? But the option market did a poor job of pricing in those larger moves. How could we go about finding those? Okay, this is how you do it. Okay? I just highlighted them a moment ago, but I just wanted to show you. Every single arrow in here is a breach at some point in some time of expected move. This, people, is total insanity, and I'll tell you why. What's supposed to happen? 68% of things are supposed to happen inside the norm. Does that look normal? This is complete and utter chaos. The dramatic and continual breaches, okay, of expected moves are providing ample setups. It's Christmas for outlier events, and it has been. And I'm actually going to show you something that's even going to blow your mind even more than this, because there's better ways to identify this, because people are looking at this like, but how am I going to find it? I'm showing you in the queue. I'm showing you in this, but we're going to actually profit from it in a minute. Every instance of the expected move being breached is an opportunity that people are missing, that you're missing, okay? How can we find these outlier moves? But how can you find them with consistency? This can't be guesswork. You can't, you know what? People do this all the time. Like, I'm going to open up a chart and I'm going to find me some wild moving stock. It's not about a wild moving stock. Okay? Tesla's a wild moving stock. And Tesla is not a great candidate for these outlier moves right now. The Qs are unbelievable. IWM, it's good. How do I know this? Okay? It's not going to be guesswork. We're going to employ the use of volatility ranking. Okay, and volatility ranking is actually going to help us. It's going to give us and provide us the greatest statistical odds of finding, okay, these types of outlier moves. Now, some people don't really get what outlier moves is, and I'm going to show you IV rank and percentile. Now, this particular tool is found, there's two major platforms that have IV rank. The two platforms that have IV ranking are, okay, TOS, which is Thinkorswim. This is Thinkorswim. The other platform that has it, okay, is Tastyworks. Those two platforms are the platforms that have IV rank and percentile. Now, I make no two ways about this. Yes, this is a screenshot of Thinkorswim. I use Tastyworks, okay? The calculations right here, one of the reasons I have the screenshot up here, I helped actually build that calculation. I helped build all the expected move calculations. That, okay, that was my job for 15 years. It wasn't software development. I don't want you guys to get me wrong. I'm not a developer. I am not a geek. I am not a geek. But I am a trader. And the reason that these trading applications have these equations on them that say things like IV percentile or expected move, traders like myself, we use this stuff, okay, and have been using this stuff from the onset of our career. What this IV, okay, percentile means. Let me put this in context, okay? When it says 21%, what that means is that here in the QQQ, see, the QQQ throughout time has really, really high volatility and really, really low volatility. But you can immediately rank where volatility is versus the previous 52 weeks. Now stop for a second, okay? Don't freak out on me. Breathe, people, breathe. It shows you right here, and I have to kind of just zoom in. It's a little hard to see. There's a 52-week high implied volatility, which means the highest implied volatility this saw was 78%. The lowest implied volatility saw was 14%. Right now, okay, we're ranked somewhere between 78 and 14. Where are we? We're ranked at the 21st percentile. Done. Once you know the IV rank, okay, it'll actually give you a much higher probability of outliers. Let me explain it, not in geek fashion. Okay, this is geek fashion. Here's non-geek fashion. Let me actually show you the chart. Okay, if I show you the chart. Markets right now, okay, markets are moving at an incredibly high rate, yet with lower implied volatility. Would you agree that that is a big move up? I think everybody would agree, yes? Are we okay here? Anybody? 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 Would everybody agree that this is a fairly large move up? Is that a fair statement? Okay, that was a ridiculous move. It's like one of the most linear moves. Like, I could not get a ruler and draw that any straighter up than it happens to be. Just wait, one day it's going to be like, ugh, and they go, oh, ooh, it's going to get good, people. So let me tell you, this, that ain't natural. That just isn't natural. It is an absolute wicked move to the upside. You want to know the craziest thing about this up move? It's not the up move. The craziest thing about the up move, look how low the volatility is right now. That's the point that everybody's missing. Implied volatility is lower now than nearly any point from the onset of the corona crisis. So you're actually seeing right now lower IV. This is implied volatility. This is what prices options. This is what prices expected moves. It's incredibly low right now. That's where we are today. And yet the marketplace is exploding in movement. Gotta understand this. And you gotta understand it because this is the best edge we have seen in literally over a decade. This is as good and more sustained than 2008. And I'm dead serious about that because people, okay, I made my career, lifetime career in 08. I mean, the volatility was sustained, and I don't mind saying this. It's not exactly like a popular topic to talk about. People always say nobody knew 2008, like, oh, it was going to crash. You kidding me? I was actually running the education division of a major brokerage firm, all the traders at Thinkorswim, okay? And we were still, a publicly traded company, but we were still Thinkorswim. It was before TD Ameritrade. All the traders there, they're like, this is going to be the greatest event in the history, okay, of us, meaning that in our lives, this is going to be the greatest event. And all of us were saying that in 2008 because volatility just couldn't get any higher. I really believed that until what we just saw with Corona, okay? This, it's not the move down, okay? What was shocking, it's not the move down, it's this move up. The move up on ever lower volatility, you got to be kidding me, okay? This is, it's literally the most consistent volatility that anybody's seen. And I'm going to show you exactly why, what it equates to in terms of trades. Understanding implied volatility, it's a step in the right direction. But all this stuff, because it's stuff at this point. It needs to be turned into a strategy. You gotta turn it into a strategy. And I showed you, back spreads, and I don't want to get fancy. Okay, I want nothing but consistency. I want consistency to see potential profit. Okay, how does this stuff translate into profits? Okay, big moves, they're your opportunity. Okay, the unpredictability, that move up is precisely what we're looking for. I started tonight saying, embrace the chaos. I really mean that. Okay, you got to kind of embrace chaos. One of the easiest things to explain tonight, and this is the irony, the toughest thing for me to explain is all that stuff about volatility. The easiest thing for me to explain, we're going to get your gamma iron on. We're actually going to go out and we're actually going to do what's called a gamma iron. Okay, we're going to position ourselves for a decent sized move. Let's just get down and dirty. How do you position yourself most effectively for the possibility of extreme movements without exposing yourself to drastic risks? And you don't want to get cute. You don't want to overthink this, okay? It's dead serious, because right now, okay, there is potentially billions up for grabs, and we're looking for that constant big move. Let me get to the gamma iron structure. Okay, so we're going to structure the gamma iron, the mother of all trades. Let's say, okay, that we have an underlying here, and we'll use our fictitious underlying. Okay, I'm gonna by the way, I'm gonna script all of this, and then I'm gonna take you through it again, and I'm gonna take you through it again, and then I'm gonna show you some real trades. So we're actually gonna start with a fictitious symbol, and our fictitious symbol is always called stock. Okay, and let's say stock is trading right smack at, we'll make it a $200 product. By the way, everything right now is $2,000, but that's okay. This is a $200 product, because it could be like the QQQ. It could be a little bit like the spiders. Although the spiders now are trading at 34, 340. But let's make it a $200. Now, do I own the stock? No. Do I want to own the stock? No, not really. Okay. Do I have to own the stock? No. So I don't own the stock. That's correct. Do I have to own the stock? No. Am I going to get put the stock? Definitely not. Did that answer a lot of questions? I enjoy doing that part, because whenever I talk about options, people are like, am I going to get put the stock? Have I got risk over here? What's about to happen? I'm like, whoa, calm down there, cowboy. Okay, what we have here are expected moves. So we're going to put like an EM, for example. And let's say that the EM is plus or minus $10. Okay, I don't have to worry about that, but we're going to go out, and in this case, we're going to buy, and we're going to make this a 210 call. We're going to buy a 210 call. And then I'll put a price in here in a second. Calm down, okay? We're going to go out there, and we're going to buy that. And we're also simultaneously going to be buying, all right, a 190 put. So I'm actually going to buy here and buy here. Okay. And if you actually know what this trade is, this is actually called a strangle. You buy here and buy here. The problem with a strangle, it's going to pay way too much for it. You're dead. You're already dead. You just don't know it. We're simultaneously going to turn around and we're going to sell, okay, a 215 call against this. And then we're also going to sell a 185 put against this. Now everybody, of course, wants me to attach prices, but let's not worry about that just yet. Calm down. Just calm down. Okay? We're going to buy a 210 call. If we buy a 210 call, it gives the right to buy the stock at 210, right? I have the right to buy the stock at 210. What happens if the stock goes all the way up here to 500? Well, I have the right to buy the stock at 210, but everybody else in the world has to pay 500. What's a 210 call worth if the stock's trading at 500? It's worth a lot. But, okay, the stock's probably not going to 500. But if you buy a 210 call, you have the right to buy the stock at 210. So if the stock went to 230, a 210 call with the stock trading at 230 has got to be worth at least $20. But I'm not just going to buy a 210 call. I am simultaneously going to sell a 215 call. Now, for those of you that are brand new to options, you probably think, how do I sell something? I never owned it. Well, you don't have to own it. There are buyers have rights, okay? Sellers have obligations. This gives me the right to buy the stock at 210. This obligates me to give somebody else stock at 215. So if I buy if I buy a 210 call and I sell a 215 call, and the stock goes all the way what to 220, let's say 220. You have the right to buy the stock at 210, but everybody else in the world has to pay 220. So what happens? Okay, you could actually buy the stock at 210, but you would automatically then be forced to sell somebody else the stock at 215. You could only make a limitation of $5 in here. You go, that's not very fair. Why am I so limited? Who cares that you're limited? Because it's limiting your risk. What are we doing in this particular trade? Well, we're actually buying a call spread and buying a put spread. And this entire strategy, and I'm just going to sum it up over here. This entire strategy is going to be done, okay, for a $2, okay, debit, okay, $2 debit. Sorry about that. I'm writing backwards on my little pad over here. It's a $2 debit. It's a $2 debit. So how do the option prices work? Well, for the most part, it's a $2 debit. This option over here, paid $5 for. This one, you probably sold it for somewhere near what? $4. So you paid basically a buck for this spread. Then over here, same animal. You paid maybe $5 for this put, sold this put for $4. Okay, what did you pay for this? A buck. So if you add it up, you paid a $2 debit. What's the most you can make? Well, you can make what? You could make as much as $5 here, or you could make as much as $5 here, but you can't make 5 on both because this stock can only go one way. It can go higher or it can go lower. Stock can go higher, stock can go lower. So you can't make $5 here and then make $5 here. You're either going to make $5 here or you're going to make $5 here. So what can you actually make? You can make $5, of which you paid $2 up front. So what is your profitability? $3. Time out. Okay, why do we like this strategy? Do you have any idea how consistent this is? Okay, this thing is one of the most consistent strategies you can do right now. And all we're doing right now, and people that understand options, if you understand options at this point, you go, really? All he's doing right now is doing what? Buying an iron condor. That's all he's doing. He's just buying an iron condor. Let me tell you once again, this is not about buying iron condors. This is about actually knowing when the outlier and the right underlying to use for the outlier. It's about buying the right iron condor. It's about buying the right structure of the iron condor around the right expected move with the right volatility at the right time. This one is just hitting week after week after week after week. We're pulling these things off. It's also buying the right gamma. Okay, this is the strategy I'm telling you to employ around this. You could be one trade away from this. This, what is this? This is a gamma iron example. And again, it's like, people look at this, they go, listen, for those of you that understand options, I grew up as an option seller. This is a buyer of options. And I'll tell you right now, buying options, that's the crap you want to be in right now. This is a buyer of options. This strategy, how does it make money? Okay, well, we showed you a distribution curve, and we showed you that the expected move is here and here. Guess what? All I'm doing is buying the expected move. If we go to the expected move, okay, or have an outlier event, remember I showed you the 3 lines on the chart? If you pop outside or pop down below, that's going to be out here. You're going to make money, okay? This strategy is pretty nominal in terms of cost, $2.13. If you did one contract of this, it'll cost you $213. If you do 10 contracts, it's $2,130. If you do 100, you can just keep going up. You don't have to trade the QQQ. You can maybe do the SPX, the mother of all products. Okay? This is the kind of stuff that you have got to learn. I'm going to show you exactly why. First of all, you're in a marketplace that I would call dysfunctional. And because it's dysfunctional, well, this is why you need gamma irons in your life, and you need them now. Because great gamma irons are designed to provide consistency in what I would term as an inconsistent marketplace. Gamma irons, they're non-directional. You didn't see me spend time like, did the MACD line up? What's the Fibonacci doing? The Fibonacci people told you to do it. Okay, overcomes a high probability being stopped out. You don't use stop orders, defines your risk. If I went out there and I paid, what did I pay for that last gamma iron? Okay, 213, there's my risk. Provides a high probability of success. You want to know about probability of success? Because that's big. limits capital exposure. You can limit it to $213. You don't even have to do $213. I could actually knock these gamma irons down to $50 trades, and you never need to buy or sell the stock. Okay? I want to stress something before I go any further. Okay? I want to stress something here with this gamma iron. Do you have any idea that you're at an all-time high right now in the marketplace? In the most serious recession since the Great Depression, okay, at an all-time high. That should bother people. You're worried about everything in terms of directional bias. Are we going to stay up? Are we going to stay up? Are we going to continue to go higher? You have got to drop all that garbage. Okay, get rid of the baggage. You got to come here. You got to come and lose the baggage, because I'm going to tell you right now, it isn't about what you think it is. It's all about, okay, the ability to move. Look, probability of profit is high, because I want to show you something interesting. This is stuff that people don't totally understand. It's the probability of touching the break-even points. Now, some people don't understand what the probability of touching equation is. By the way, the probability of touching equation, this is the Analyze tab on Thinkorswim, okay? This is my baby, the Analyze tab on Thinkorswim, okay? Me and the Analyze tab, we related. We worked together for 15 years. I helped build this thing. Look at the probability of touching the break-even points. Here, I know that's hard to see. You know what that says? Basically, it says 53%. That's the break-even point. The break-even point is your worst-case scenario for this. There's a 53% chance of hitting better than worst-case scenario. But on the other side of the equation, there's a 56% chance. I know it's sideways over here. 56% chance of hitting the break-even point. Like, why aren't you doing these? I'll tell you why you're not doing these. Because people don't know how to set them up. They don't know how to build the right trade. They don't know how to build, any of this. How did I structure the trade? It looks a little bit intense. Why did I use the September 25th expiration? How did I know which calls to buy, which puts to buy, which calls to sell? How much do I actually pay for this thing? It just goes on and on. Listen, this monkey, I'm speaking of myself, knows outlier trading. Okay? And you should too. Okay? You got to understand this stuff in this marketplace, because I keep telling this to people and it doesn't really resonate. Okay? This marketplace is at an all-time high. This is not, okay, eventually, this is not going to end well for anybody, right? That's long the marketplace. They're not going to, the marketplace is at an all-time high. The economy is already in a deep recession. All we need right now is somebody just to kick the leg out of a couple of the tech stocks. You're done. Your 401k is going to get decimated overnight. Okay? I'm telling you, you got to learn to get away from what you think and get into outlier trading, right? And even a monkey knows better. So it's about what I'm looking like after 6 months in seclusion. I think most of us are probably looking like that. It's good. He's got clean teeth. He's got clean teeth. Welcome to gamma irons. Now, I'm actually going to show you the consistency of gamma irons, and these are all my own trades. Every single trade I'm showing you here was done, okay, at TheoTrade, and literally, okay, posted in our chat room, texted out to our clientele. Here's one actually put on May 6th, taken off June 1st. By the way, these are in series order, meaning that these gamma irons that I am going to show you right now are in an order of occurrence. I only put these on, okay? When I say in an order of occurrence, I started May, okay, where I could have gone back, by the way, much longer, but I started in May because this was enough trades over here. This is a SPY gamma iron. This is a 245 debit, closed for a 315 credit. Every $245 invested, I got back 315. It's 29% return. Stop, okay? Stop right there for a second. I am showing you as if you only invested $245. This could be $2,450, okay? For what? Now I got back $3,150. You're like, okay, man, it's like a 30% return. Yes, okay, but the key to gamma irons, it's not about big returns. You know what the gamma irons are about? Consistency. Let's do it again. Here's a GLD. You know what GLD is? Gold, Jerry, gold. This one's actually June into July. Every $183 I invested, I got back 39. It's a 30% return. Seeing anything, by the way, common about this? By the way, what our members are saying, out of 236, GLD filled to 239. I just want to show you this. Okay, I got filled to 239. A got filled to 239. Nick got filled to 239. Newman, Newman actually got filled at 238 GTC. Got filled 236 and 240. And everybody pretty much got out at the exact same price. Cynthia, you missed it by 3 cents, Cynthia. Now, again, following this. So this is actually a June trade. Now we're getting a little bit more recent. We're into July. TLT, Gamma Iron. I mean, you got to understand, nobody ever dreamed of putting this stuff on in bonds. Okay, put these on for $1.68, took them off for $2.22. Every what? $168 I invested, I got back $222. It's a 32% return. Let me ask you something. Are you starting to see something very common about the return on here? I don't give away a whole lot tonight, but I am going to give you this. Those returns, okay, they are just consistent every single time. And you know what? Somebody's inevitably going to ask me, hey, show me a losing trade tonight. I don't have a recent one inside of Gamma Irons, okay? I will show you everything in terms of my account. I do not have a recent losing trade. I'm close right now, okay, because we stalled out this week. I don't have a recent losing trade inside of Gamma Irons. This one's a 32% return, okay? Moving on. This is a SPY Gamma Iron, another Spider Gamma Iron. Now remember, okay, I go back to the well. This is a SPY Gamma Iron done in what? May. This is a SPY Gamma Iron now done back in July into what? Okay, there's July, right into August. It's 236, 309. Every $236 I invested, I got back 309. Remember, that could be 2,360 to return $3,090. It's a 31% return. Okay, starting to see any consistency in here? Yeah, we're getting there. Next one, another SPY Gamma Iron. Why? Because if I did one, well, hell, I might as well do another one. Look at the differential in expirations. Here's what. I'm actually doing these almost on a weekly basis. This is August 21st. This one's August 28th. 21st, 28th. They are two totally different trades, totally different expirations. Here, now we're starting to get a little bit more recent. July 20th, out on what? August 10th. Every $184 I invested, I got back $247. It's a 34% return. Moving on, okay? Here's an IWM. IWM. This one actually opened on what? August 5th, closed August 11th. Every $204 I invested, I got back $266. It's a 30% return. Again, this was actually a September 18th trade. Okay, September 18th. Did I have to wait to September? No. It made my 30%. Okay, made my 30%. I'm out. Okay, here's another TLT. You know how many TLT iron condors I've done? Okay, these Gamma Irons, they're huge in here. So this one I actually opened. By the way, this is the fastest I've ever profited on a Gamma Iron. This is actually put on August 10th, closed, what? On the 13th, okay? Every $195 I invested, I got back 236, 35% return. We just keep on going, people. Want to see a little bit more recent? Come on! What's more recent than August 13th? How about this? Lululemon. We're getting more recent. Lululemon Gamma Iron. This is one of the first times I've actually shown you an equity product. What's an equity product? An equity product is just that. It's an equity, okay? This one actually put on what? July 20th, taken off none other than August 14th. Every $189 I invested, I got back 260 to 38% return. Okay, Lululemon, done. Next one, QQQ. In the QQQ, okay? By the way, are we recent enough? Okay, I'll leave it at this one because I can't get more recent. The QQQ, all right? Entered into July 28th. This one took a little longer. Actually exited what? Today. I exited this one literally 1 hour after the cash open. Every $217 I invested, I got back 307. It's a 41% return. This one got away from me a little bit because it was a big pop. Okay, big pop into early trade over here. Got a nice finish to it. Again, what our members are saying. Again, you won't find a more supportive and more profitable room anywhere in this retail business. Okay, these are all very, very recent quotes though out of our chat room, and I want you guys to understand, like these Gamma Irons. This isn't about sitting in front of your screen. This is about execution. This is about understanding, okay? It's understanding in context, not just how to put the trade on. I think that anybody can probably put on an iron. But you got to actually have, okay, the right setup for it, the right volatility. Listen, this is not a time-intensive trade either, okay? Every trade shown today was displayed live at TheoTrade. And the trade results that we're showing today, this is a very hands-off strategy. I'm not going to say that about everything that we do here at TheoTrade, but this is a part-time strategy. This is not sit in front of the computer. This is as hands-off as it gets. Set and forget order types, a fraction of your time. It literally is a fraction of your time is enough, okay, for this. Some characteristics of these particular trades. they increase in value when exposed to heavy volatility. So if the marketplace were to tank, this trade's going to make money. Increase in value if the market sells off or rallies huge. Here's the irony. If we sell off, volatility goes up, okay, and this trade profits. If we rally huge, the market goes up, the volatility might drop, but this thing profits. Okay, significant profit potential in an upside market or a downside market, but it'll lose. And you can have losses, but minimal losses. Right now, if we continue to drift. Why? Has anybody seen the VIX right now? It's still at 21. And guess what? This strategy, the VIX is still at 21. It's not going to have a huge impact. Why? Because this is the stuff that you want to do. This is the stuff that you want to do, all right, when volatility is up there and it remains up there. It's the perfect spread, though, to also reduce risk of a stock portfolio, long or short. You know, if the marketplace explodes higher or tanks lower, don't you want to have one of these things on? Because if you have right now a 401k, you got a lot of risk, first of all, in a 401k. But if you have a 401k and the market tanks, at the very least, that strategy is going to make you a couple of bucks if the market tanks. It's an excellent tool, though, for those seeking to make returns on big market events, right? Now, you got to actually go out and you got to build, okay? Building the gamma iron. And one thing I will continually reiterate, and I just, something that I can never stress enough. Please do not let options intimidate you. I can't stand that people are like, I have to learn something here. I'll tell you what, putting this trade together is actually the easiest part of this. The gamma iron below is being done for $1.80 debit, but anytime I talk about options, they are power tools in the marketplace. If you're trading stock and you're only trading stock, there's nothing wrong with that. But stock is it's like building a house with a handsaw. It's going to take you forever, right? I'm trying to cut this 2x4 for the last 15 minutes. You got to get not necessarily a chainsaw, but you got to get yourself a table saw. You got to go, quickly through that. That's what options are. I mean, options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. But if you do not know how to use options correctly, it's going to be just like a massive chainsaw. You're probably going to lop off a couple of fingers. You got to do this stuff right. There are variables involved in trading options. Listen, this is what you need to know to successfully create gamma irons with minimal risk. I mean, this is about gamma. And for those of you that know what gamma is, gamma in options, it's one of your Greeks. Okay? It's one of your Greeks. And this is a long, long gamma. Okay? But when I say, what do you have to know in here? Okay? You got to know how to build this thing. I mean, here, let me start with this. When and where do I place gamma irons? What do I say, when? Okay? I don't know. When? Like right now. Oh, it feels good. Feels good. Let's just go for it right now. Where? What products? Okay? When and where do I place these things? I mean, that's a pretty big grapefruit just hanging out there, right? How often should I place these gamma irons? Do you have to continually monitor them? Absolutely not. In fact, I'm telling you right now, on gamma irons, I use GTC orders for everything. GTC, what does it stand for? Good till canceled. That basically means, okay, to get out of the trade, it's a GTC order. That's it. Okay? This trade is about the setup. It's about putting the trade on and not really monitoring it. It's going to monitor itself. Okay? How do I set these trades up? Okay? And what's the correct market volatility to place the trades in? I don't want to joke around about this. How do I set up a trade? This trade has what we term 4 legs, right? Because you have to what? You have to buy a call. You got to turn around and sell a call. Whoops. You got to sell a call. Then you got to turn around and buy a put. Then you got to turn around and sell a put. And you're like, oh my gosh, it's 4 legs. So how do you actually, in context, build the trade? It's pretty easy to do. The correct market volatility, that's actually key. Building the trade, again, I think building the trade is pretty straightforward. It's the volatility. Okay, it's when and where to place these. The where. What expiration cycle do I use? What expiration cycle do I create that gamma iron in? Should I do this a month from now? But I'll tell you what, why not do it 3 months from now? Because if you go 3 months out, it's going to give you more time. It's going to give you more time, and the decay is not going to be as heavy. Okay, so when I say the decay, the options decay. So if I go 3 months out, but if I go 3 months out, there's not going to be that much gamma, which is actual movement in the option price, and it's all the trade-off over here. You have to know exactly what expiration cycle, what volatility. People, you got to know what options do I buy and which options should I sell. What's the correct probability of success for the gamma? You know what? The gamma iron, it's actually a term that most people are not familiar with. That's why I didn't put it into this presentation. It's not called probability of success. It's called what's the probability of profitability? What's the probability of profitability? Meaning, and you saw me on those gamma irons, what was one of the things that you saw that was incredibly consistent about the gamma iron? Almost every single gamma iron, what did I make on it? Okay? Almost every single gamma iron, what did I make? By the way, I never leg into the gamma iron. There's no reason to. It actually unbalance it. I don't mind telling you that, yeah, don't leg into that. Okay, what did I make on these gamma irons? Almost every single gamma iron, I made right around 30%. Okay, how about this? I can actually tell you the probability of hitting the 30% gain. Okay, that's important. Do I need a large amount of capital in my account to do this? Absolutely not. Okay, $2,000 in the account. You could do gamma irons instead of having $200 at risk. You do $50 at risk. You just scale it back a little bit. Okay, you don't, and one contract, you don't have to do a $5 wide spread. You can do these things literally for $50 at risk. Obviously, you know, making 30% on $50 ain't much, but I'll tell you what, okay, it beats what most people are doing out there, which is what? I went out there and I bought calls on Tesla and I almost made money, but I panicked. I mean, that's crap. It'll work right now until it doesn't. The problem with this marketplace, and I'll tell you what the problem is with this marketplace right now, everybody's a genius because we go up every single day. Wait until that volatility starts to kick back in. Everybody's a genius the last 4 months. This is the best environment right now to learn how to do this stuff. You do not need large amounts of capital. You can absolutely do this in a retirement account. What underlyings, what stocks or indices make the best candidates? I'll tell you what, you saw a couple of my gamma irons. I kept going back to the well. I was like SPY, IWM. You saw a couple in the TLT. You saw a couple in the QQQ. I mean, hell, I pulled one off in Lulu. Okay, Lulu. Nobody ever dreamed of doing one in Lulu. Okay, how do I get in? How do I get out? When do I get in? When do I get out? You know, what are the percentage returns supposed to be? You know, I told you 30%. 30% means nothing. Okay, because I made consistently 30% on those gamma irons, the 30%, people, that's not the important point. The important point is what is my probability of hitting the 30%. What's the probability of hitting the 30%? That's what's key in this equation. Okay? Can I do this in an IRA or retirement account? Absolutely. How do I size trades for my account? Listen, I don't care if you have a $2,000 account or $2 million account. You have to size properly. What's the right amount of risk for you? How do I actually go about structurally building? But more importantly, like, how do I do this on a trading application? Let me show you what we do here specifically at TheoTrade. We create recipes in trading, okay? And it's just as, you know, easy as it sounds. When I say recipe in trading, we actually build full-blown, like, flow charts of a recipe. And when I say a recipe, you know, when you go out and you bake a cake, the recipe is so definitive, right? Step 1, step 2, step 3, step 4, step 5, step 6, right? Okay, you start with, you know, you're going to bake a cake. You're going to bake a cake. You're going to follow a recipe. Okay, trading's a little bit different because yes, we can get you in step by step by step by step by step. Okay, and that's exactly what we do with recipes. We literally here at TheoTrade, we create a recipe. What's step number 1? Okay, liquidity. What's step number 2? Let's say expiration. You have to have the right expiration. So you got to have liquidity, expiration. Then we actually got to talk about what product do I select? Should I do this in the SPY? Should I do this in the IWM? Okay, should I do this here? Then the next step, for instance, is volatility. Okay, what should the volatility be? And step 5, and it just goes and goes and goes and goes and literally walks you through a little bit of a mousetrap to find you what? The perfect, okay, gamma iron. But then people, once you're in this thing, there's variables. And that's where, like, you know, a recipe to bake a cake doesn't have a lot of variables. You bake a cake, it's pretty definitive. You're in, you're out, you shove that thing in the oven, boom, it's a cake. We actually got to get you up in the air like a pilot, okay? Then there's variables. What if the market goes up? What if the market goes down? What if the market stays flat? What if there's a dividend payable? What if? You got to understand, okay? Trading and recipes It's not just, walk you in a trade. Okay? Trading is about answering the what ifs. What might be a good candidate? What's the correct options expiration? How much capital do I commit? When did I actually execute the trade? At what price? Which strike options do I buy? Which ones do I sell? That's what we do here at TheoTrade. We build recipes, but the recipes, what they are is definitive criteria. They're checklists. They're actual flowcharts. If the market goes up, follow this path. If the market goes down, follow this path. If there's a dividend coming, this is what you need to do. But for every single strategy and each unique variable that you're going to encounter, what do variables look like? What's the right probability for my trade? How many option contracts do I do for my account size? When do I close the gamma iron? What if we sell off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? It's about how, it's about when, it's about why, it's about what price, and it's just people. I'm just scraping the surface, okay, of some of the variables that you're going to hit. This is the same thing, You hop into an airplane, and the first thing that pilot does in the cockpit is whips out a checklist. I mean, most of them, okay, they have iPads now, but most of them still have old school, okay, printed out checklists that they go through in that aircraft. And then what you don't see is, because they close the cockpit door, we're in flight and they have a problem. What do? They actually refer to literally like, hey, this nose is going down. What do I do? And they're actually going through checklists the entire time. Okay, it's variable after variable after variable. That's what trading is. Listen, you can read what a spread is. You can read what an iron condor is. I'm telling you right now, you can go out and you can Google. I bet you can Google 1,000 different pages will show you what an iron condor is. Okay, I'll tell you what they don't have. They don't have a recipe. Okay, they don't have a recipe to tell you how to actually buy the iron condor. How do you see profitability from the iron condor? What's the probability of profit supposed to be? How do I actually construct the gamma iron condor? What we do here at TheoTrade, we give you 20 plus years of trading experience. That's just me. Okay, I had access to client order flow for 15 years. I literally viewed and studied millions of trading accounts, and I ran education for 15 years at a firm, okay, with the largest option order flow in the entire industry. Where a lot of these recipes come from, okay, is not just my own experience, okay? It's other people's experiences, other people's money. It's actually viewing and studying millions of accounts and that big data, okay, to come in there to a summation of the right trade and the right strategy. Listen, criteria is your recipe for success. The following strategy and the corresponding criteria, it just requires the utmost attention to detail. I mean, we spent years fine-tuning, okay, gamma irons. Gamma irons, this is like not something new. Buy-side iron condors have been around, okay, and they've been around for a long time. But what has not been around, the environment right now, okay, it's all about this. Again, we spent years. When you approach the section on criteria, you follow the steps to build a trade. Okay, we built a full-blown class on gamma irons. It's the ultimate guide to buying iron condors. I am the instructor. It's a 3-hour course. It's available immediately. What we actually did with the gamma iron course, we recorded the course a few weeks ago. Okay, we rendered it, we cleaned it up, we got it ready. The course, as I said, it's available immediately. You can download the course on iOS or Android. Okay, so you can download it, but with the course comes the slide deck that includes the entry and exit criteria. It's the checklist available immediately for download. And again, you can access this 24/7. You can access it over the web. You can do it on your iPad. Again, you can download it onto your device. You can download it onto your phone. You can watch the entire course. The class, okay, is $497. I will go through the curriculum here in just a moment for the Gamma Irons course. But before I do so, I always, whenever I throw out a class like this, okay, because people obviously, you want to learn the Gamma Irons. But whenever we throw out a class here at TheoTrade, I also want to give you this. Here at TheoTrade, we do not sell, okay, an autonomous class. We never have, and we never will. And I want to make that really clear. And people, what does that mean? We're not selling you here at TheoTrade a Gamma Irons course. You're not paying $500 to go to a Gamma Irons course. You're going to pay $500, and we're going to support you in every way, shape, or form. We're not just going to give you a course that you can download or a course that you can view online and then just give you a little pat on the tushy and go ahead, go ahead, go play in the street and the train tracks. You kidding? This marketplace is totally insane. But I want you to know, and I'm going to talk about some bonuses because, everybody always asks, let's see a couple of bonuses tonight. We'll talk about that momentarily. What I want you to know about TheoTrade is simply this. Listen, I recognize that a lot of you, and there are hundreds and hundreds of people on today, but I recognize that a lot of you, you've taken courses elsewhere. Okay? By the way, how many of you have actually taken courses elsewhere? I think it's a fair question. Admitting it's the first step, people. So you go out, you take a course, and you pay $500. And then they sell you an indicator for that course for another $500. And then you have to actually take a class for $500 to learn how to use the indicator for $500 because you took an initial class for $500. We don't do any of that here. Listen, a little background on me, again, to reiterate this, and to talk about that we don't do that here at TheoTrade. What TheoTrade is, okay, it's everything that you're going to need to trade and or invest. It's every indicator, every class. It's support, okay? It's, hey, listen, you can actually email us. You can talk to us, okay? Any way, shape, or form. You can actually bounce trade ideas off of us, okay? All of that is part of TheoTrade. And again, to give you a little bit of background, I'll just give you a quick story, and then I'll actually show you a little bit about the curriculum, and then I'll talk to you about some bonuses that we're going to add to the Gamma Irons course. But here at TheoTrade, listen, I started going out and teaching a couple classes after trading in Chicago for a few years. And when I started teaching classes, I was teaching classes for a brokerage firm called Thinkorswim. We were a startup firm. And people, in 2001 to 2015, I saw everything. And these education firms do nothing more. They just charge people. They have $3,000 for this class and $5,000 for this class. Okay. Even at TD Ameritrade, we had a class at TD Ameritrade that legitimately cost $24,000 for an 18-month program. It was ridiculous. Okay. When we built TheoTrade, we looked back at all the other education companies. We're like, this is ridiculous. Imagine if we can actually construct a company and give everybody everything they're ever going to need. And I mean everything they're ever going to need in terms of support, trading, okay, whatever genre of trade you want to learn, and we'll do it all at one price. And that's why we actually built TheoTrade. And we launched in 2016, we launched with one goal in mind, okay? And that is to build, if you would, the Netflix for traders. And we're not just about options. Stocks, options, futures, technical analysis, okay? Everything that you've ever seen is going to absolutely pale in comparison to the level of knowledge of our instructors. Because the entire goal here of TheoTrade is to keep you not only in this business, but in the know. And I'm going to explain exactly what that means here momentarily. So with that, I present the curriculum for this particular class and a few bonuses. The Gamma Irons, this is the workshop curriculum. So the Gamma Irons, what do we do? In the beginning of the class, we're actually going to learn how to use the Gamma Iron strategy, okay, from a unique long gamma perspective to find what other traders are missing. We're actually going to learn to take directional bias out of the equation, use the power of options and volatility to your advantage. Then we're actually going to go through step-by-step criteria in the class on how to enter, okay, and then, more importantly, how to take off the trade. There's nothing left of the imagination. It's actually going to show you a full flow for how to get in, how to be able to get out of this particular strategy, okay? Number 4, how and where you can find edge, okay? And that's actually going to be talking quite a bit about, of course, what we talked about with volatility ranking. It's a great income stream, though, for all account sizes. Number 5, how to buy options premium in the current market environment using Gamma Iron Condors. Guide to trading Gamma Iron Condors regardless of market direction, and of course, using Gamma Iron Condors to repetitively generate incremental returns. This is an incremental return strategy with accounts $2,000, okay, or a retirement account. That's some of the curriculum. Again, the Gamma Iron course, as I said, I did it a couple of weeks ago. You guys will absolutely love it. It's actually one of the best courses I've ever put together here at TheoTrade. But as I said a moment ago, we get it. People, they want more than just one class, okay? TheoTrade goes beyond one class or one indicator. Like, we get that people want everything. They want everything to be able to trade. They want everything to be able to invest. They want it at one place and they want it at one price. So I present to you this, the first bonus this evening. This, of course, is in addition. It's in addition to Gamma Irons. We're actually going to give you access to 95 trading classes. What does that mean? Okay. Well, we launched TheoTrade in 2016. Tonight, enroll for TheoTrade. You get access to everything that we've done, okay, over the previous years. We'll give you the Gamma Iron class, but we'll also give you everything. What's everything? Everything. Before I go any further, okay, there are 95 classes here. I am not the only instructor here at TheoTrade. There are currently eight full-time instructors, which I will introduce to you momentarily. We'll actually give you the Gamma Irons course, okay? The maximum returns of infinity spread. Infinity spreads are huge. Huge. Okay, I actually did a risk to a spread today. Guide to surviving and thriving extreme volatility, volatility back spreads. You saw a ton of volatility back spreads today. In-out spreads, that's the most prolific class we've ever put together here at TheoTrade. Black book spreads, how to collect income being short. This is actually the risk to a spread class. Guide to selling high probability spreads, iron condors, iron up. Okay, selling premium, minimizing risk, day trading. We have tons of different day trading classes. This one specifically is NASDAQ futures, covered calls, income generation for your stocks, consistency in trading, top 10 skills for growing a small account, pairs trading. People, all I'm doing is just scraping the surface over here. We're literally from day one. Okay, you enroll tonight for $500. We give you access to 95 classes. It's over $9,000 in classes alone. Like, again, we could go out there and we could sell classes a la carte. $500, $500, $500. You got to realize that crap is wrong. It's just wrong. You go out there and you think that you're getting a good deal on a $500 class. All you're doing is getting just swept into what? More classes, more indicators, and more crap that you have to buy. What we do here at TheoTrade is everything that you're going to need to invest. Everything you're going to need to be able to trade. And when I say everything, I mean everything. So initially, okay, that's the first bonus. We give you access to over 95 classes. Okay, and again, there's something for everybody in here in terms of genre. You name a genre of trade, okay, and we've got it. In fact, let me introduce you to our instructors. So, as I said, several of us here at TheoTrade, we left TD Ameritrade with every intention of actually starting an education company outside of the brokerage firm. I'll introduce you first and foremost to Jeff Bierman, also known as the Professor. By the way, we don't just call him the Professor. Jeff's actually a professor of finance at Loyola, and he just actually started his first graduate course, teaching his first graduate course over at Loyola. Jeff costs $42,000 a year at Loyola, or you can actually get him here at TheoTrade. By the way, Jeff worked with me at both Thinkorswim and TD Ameritrade. If you've ever been on the Thinkorswim charts, Jeff actually built over half the studies for it. Jeff also has a CMT. Next in the docket over here, Matt Williamson. Matt is a market neutral premium selling option strategist. If you are an engineer, if you're what I would construe as a geek, okay, this is the guy for you. If you're into spreadsheets and so forth, you're an engineer, you want to get wild into the Analyze tab, Matt Williamson's your guy. Okay. Next on the list, Corey Rosenblum. He's our senior strategist. He's our resident swing trader. Okay. Corey trades both options and futures contracts, but swing trades, which can actually be, okay, several days. He's literally swing in, swing out of these particular trades. Corey also has the designation of CMT. Okay. Brandon Chapman, designation of CMT. By the way, I'm going to throw one more for you. Blake Young also has a CMT. You do realize we have 1, 2, 3, 4 CMTs on staff. If anybody knows what a CMT is, it's next to an impossibly difficult designation to get. I personally do not have a CMT. Okay, we have 4 CMTs on staff. There's only a few thousand CMTs in the entire world. We have 4 of them on our crew here at TheoTrade. So Brandon Chapman. Brandon also worked at both Thinkorswim and TD Ameritrade. And earlier, I was telling you, okay, there used to be an 18-month course at TD Ameritrade, and for the 18-month course, we charged $24,000. Brandon, he actually wrote the book for that course, and he'll tell you firsthand what we used to do for $24,000. What we do here at TheoTrade for $500 will absolutely blow that away. It'll just blow it away. Okay, as I said, all the education that you guys have seen and taken, nothing compares to the level of depth that we have, okay, from the instructors here. So Brandon Chapman, by the way, every one of our instructors has a minimum of 15 years of trading experience, not 15 years of market experience, 15 years of active trading experience. Jeff Bierman actually ran part of a hedge fund. Matt Williamson runs part of a hedge fund. Corey has been around the business forever. Brandon Chapman has been a trader. We actually pulled him on to Thinkorswim and TD Ameritrade. Slim Miller, he's had 43 years, stock options and futures trader. Slim actually started trading, okay, in 75. He was actually there, okay, when they first opened up the Chicago Board Options Exchange. But in 75, he started trading the SIBO. He was even trading prior to that, okay. Then we come to Tony Rago, NASDAQ futures. This is our intraday strategist. What does Tony do all day? He sits there all day, okay, and scalps futures contracts. Literally all day, calling out different trades, different setups all throughout the course of the day. And our newest instructor, literally just starting last week, also coming from Thinkorswim and TD Ameritrade, Blake Young. He actually specializes in market profile, okay, which is also volume profile, futures currency, and our new commodity trader. So we had to actually add another genre. People kept asking, can you have a commodity trader? Slim Miller trades a ton of commodities. Now we actually brought in Blake Young because his specific specialty is market profile. That's the first bonus. The 95 classes that we do here at TheoTrade, they come from all of us. As I said, we have 8 full-time instructors now on the crew. Bonus number 2. This is the second bonus. We give you 3 months all access pass, okay, to TheoTrade. It's a TheoTrade VIP membership. It gives you 3 months access to TheoStream. And okay, what's TheoStream? Well, what we have at TheoStream, we have a live room. We broadcast 6 hours per day. I know not everybody can do that, but you got to understand, we're giving you 95 classes. Oops. Okay, 95 classes. We broadcast 6 hours a day. We actually fire out real trade ideas and real-time market insights and analysis. We do text and push notification trade ideas, including gamma irons. In fact, we texted out a trade today. The trade we texted out today was called a risk twist spread, but we're constantly texting out trades, opening and closing. We have 5 distinct trading portfolios for every genre of trade. We have daily coaching sessions. What's a coaching session? It's timely topics. It's continuing education. Daily coaching sessions are predominantly from Professor Bierman. And I put a huge amount of weight into this, we answer emails, meaning that the instructors directly answer email questions. Okay, you got to understand, you can email us, and I'm gonna lean heavily into this. Most of our instructors, most of our traders, did actually at one point work in the brokerage side of the business. A few of us actually worked in money management. We know how to answer emails when it comes to trade-related questions. And I want to make this clear. You don't have to email us and tell us like, so I have a friend that bought Apple, and my friend that bought Apple is kind of in trouble. Just email us, be straightforward, even include if you want account statements in there. I don't care. Copy and paste different trades in there. Ask us direct questions. You're going to get direct answers. We are not afraid to answer questions. Again, most of us actually held series what? I had a series 3, a series 4, I had a series 7, I had my series 24, I even had a series 66, which is a registered investment advisor. We know how to answer emails. Please, with all due respect, don't start with my friend had this position. If you want an answer, email us, because I'll tell you right now, okay, people are worried, of course, about spending it's $500 on this. If you email me one time, and I can save you more than $500, because there's times where I'm going to tell you, get out of that trade. This is the worst thing you've ever done. This is the worst thing I've ever seen. Okay, that's what we are here for. We're giving you access to another $1,000 of support, trades, and insight. And I stress this because I think the second bonus in here is huge. The second bonus is huge. Yeah, you get access to the trading room. Yes, we trade live for 6 hours a day. Yes, we're in a chat room, and yes, we can actually answer questions. When I say answer questions, like literally we're answering questions. Live, people, like that's what we do here. Like people don't really get that. When I say that's what we do, that's what we're about. Okay, we're answering questions like in real time in the chat room, but maybe you're a little bit shy. That's okay. Be shy. Email us. Ask us anything you want. On top of that, bonus number 2, access to 59 proprietary indicators and scans. So a lot of different firms, they sell all kinds of indicators and scans. We give you everything from day one. You can actually download these literally tonight. SPX expected move. We're giving you that one. I'm going to give you the link for that here in just a moment. Auto expected move, gravity points, RSI Laguerre, okay, Quantix. I use Quantix every single day, and on and on and on and on. I mean, listen, these indicators, they took us. This is IV rank versus percentile. That one's actually critical for the Gamma Irons class. These indicators took us years to build, but if we're going to use them, you need to use them too. Okay, so that's the second, in terms of the second bonus over here. So not only are we giving you access to 95 classes, we're giving you access, obviously, to all the instructors. Email anybody you want. And by the way, we will respond within 24 hours. Okay, that's a big deal for us. The live trading chat room, texting trades out to you, all the different indicators. Got one more for you. Bonus number 3, there's a live class coming up. And it's coming up Tuesday, August 25th. That's this coming Tuesday. Here we are on a Wednesday night. You're a week away from this class. This class is actually being done specifically by the professor. Jeff Bierman's doing the class. And the class, very specific. It's spring into action, tools to spot explosive moves. What this class does is it complements, okay, the Gamma Irons class. It is designed to complement the Gamma Irons class. Why? People wanted a technical setup. They wanted, when I say technical setup, they wanted a chart setup in addition to an implied volatility setup. So we said, you know what, Jeff, you gotta build a class on this. Okay, the class will be archived immediately after it. Okay. By the way, Jeff actually told me it's probably going to run 3 hours, so it's probably going to run 9 a.m. to 12 p.m. Okay, Central Time. So again, the class is coming up. It's coming. It's live. You will not want to miss this one. In terms of technical analysis, there's just nobody better. There's nobody better than Jeff Bierman. I put a huge amount of weight into him. You know, this was the first person that I called when we started TheoTrade. I said, Jeff, you still working at TD Ameritrade? Yep. He goes, I'm leaving because I'm coming. So Jeff packed his bags. He says, as long as I can work for TheoTrade and teach a class over at Loyola, he goes, we'll be good. I said, absolutely. Okay. I go, I would love to call you professor at the same time. And you're going to get the professor. Again, Tuesday, August 25th, what will be actually a 3-hour class. As I said, the course will be archived. So I know some people are like, this is short notice over here. Go to the class live because there's nothing like going to a Jeff Bierman class live. It's phenomenal. You can actually interact with him in the chat room, okay, while he's actually teaching it. I think you guys will absolutely love it. By the way, the curriculum for this particular class that's coming up, right? And by the way, all these bonuses are included. So you get 95 classes, you get all the indicators, obviously you get the chat room, but we're going to do a class. We're going to do a class live. We should tell you that class complements Gamma Irons. Here's actually the curriculum for it. The curriculum will actually give you how to evaluate different dimensions of volatility. So you can trade with confidence every day. Identify and consistently apply a variety of volatility band indicators so you know which ones to use in any market environment. How to interpret and position around volatility compression and expansion. That right there is critical for the Gamma Irons, so you're ready for whatever the market throws at you. Discover how to integrate ancillary indicators with volatility bands, okay, to time explosive price moves so you can get in and get out at the right time. And of course, when to exit explosive price moves to preserve gains, cut losses, so you can maximize profits and minimize risk. Again, this class is coming up. It's Tuesday, August 25th. You're going to love it. Listen, as I said, TheoTrade, we include everything that you're going to need to invest in trade. We do classes, we do coaching. You get email access to the instructors. There's live trading chat rooms, live trades. There's indicators, there's scans. We even have a mobile. When I say we have mobile, we built literally, all right, mobile applications for iOS and Android. Works on your iPad, works on your Android device, works on your iPhone. It's everything that you're going to need to succeed. I mean, what we set out to build here is TheoTrade is the Netflix for traders. You name a genre of trade, we're there for you. Okay, and I'll show you in a minute what I mean in terms of different classes. Listen, tonight, Total Theo, it's only $297 for 3 months. And before I even go over any of this, and again, I think I've reiterated this about 5 times tonight, there's one key factor, okay? It's $297 tonight for 3 months, okay? It is a one-time charge. This is not a reoccurring payment. It's $297. And everybody asks me, like, what happens? What's going to happen after the 3 months is up? After 3 months, you can decide. You want to pay another $297? Do it. If you don't, we get it. We want everybody that's here to be happy. We want everybody here, okay, to be with us here that wants to be with us here. We have currently now over 6,000 clientele, right? We're doing something right. We have 6,000 clientele. Why? Because we do the right by you. We do right by you in every way, shape, or form. You need support, we're going to be there for you. Okay? So tonight it's $297 for 3 months. It is not a reoccurring payment. It's a one-time, again, a one-time charge. And I will actually take you into that in a moment. So I just wanted to reiterate. Then I'm actually going to answer some questions, show you TheoTrade. Okay, Gamma Irons, the ultimate guide to buying iron condors. The course is included, okay, tonight in the $297. We'll give you access to over 95 trading classes, okay? Obviously, for the next 3 months, you're viewing all 95 trading classes. Listen, you're going to find areas that you like. I don't want you to think that you have to binge watch, okay? But you know what? A lot of you guys are working from home right now. Why not? Spend a little time instead of watching the garbage that's on Netflix lately. It's brutal, I tell you, okay? I'm telling you, spend the time. And if you want to binge watch some of this stuff, it's great. Okay, we do new monthly classes. Obviously, the next new monthly class is coming up August 25th. Okay, every month we're just pouring new classes out, and that's why I say, we have 95 classes under the belt right now. This will be the 96th class here at TheoTrade. We have a live trading chat room. We broadcast 6 hours a day. Okay, analysis, insights, real-time trade. We're constantly trading in the chat room. We have 59 indicators, proprietary indicators and scans. We do text and push notification. So when we do trades in the chat room, okay, we will send, not every trade, but we will send some of the trades out to you. We do daily coaching sessions. This is actually predominantly Jeff Bierman. And we answer the emails. And this, again, I put a huge amount of weight into answering emails because for $300 for the next 3 months, if you can email us and you can bounce a couple ideas off of it, I'll put money on it. It'll save anybody in here more than $297 just emailing us one time. If I could save you from one mistake. To enroll right now, just go to theotrade.com/gamma. And before I go any further, again, I'm going to show you TheoTrade in just a minute. Before I go any further, okay, we make this a completely riskless trade. Like everything that you need to start, okay, trading from just novice to expert is in our site. In fact, I am going to bring this up here, okay, momentarily. But when I say everything from novice to expert, there's a lot of people, they get a little bit intimidated initially when they look, and they think about like, oh my gosh, this is going to be a lot of classes. One of the first things that you want to do, I mean, literally, like one of the first things that you want to do is you want to go to this menu, okay, that literally says start here. This is for the novice, options 101, options 201, but all the way to the extreme. I'll come back to that in just a second. But at TheoTrade, just to make this easier for you, listen, I know people have been, bounced around a little bit, have gone to a couple classes. It's $297. We'll make it completely riskless. We do that. We'll just give you a money back guarantee. Trade with us over the next 3 months. If you're not completely satisfied, by the way, we don't define what satisfied means. If you're not completely satisfied, just email us, support@theotrade.com. Provide us the details, okay, of your trades. Receive a full refund. If you're not happy after 3 months, just email us, okay? Email us. As I say to everybody, listen, there's 6,000 people that are now clientele of TheoTrade. Not members really anymore. Yeah, kind of members, but it's $297. But you have to decide every 3 months whether you want to do it or not. But it's $297. This is not, listen, if you're not happy, please tell us. We'll give you back the $297. Okay? It's not going to crush us. We want people here at TheoTrade that want to be happy. By the way, the money back guarantee stipulations are only there for one reason. Okay? For $297, we want you to trade. In the next 3 months, do 10 trades using any of the TheoTrade strategies, but you have to use our criteria. Okay? You do 10 trades in the next 3 months. Okay? Your initial account value must exceed $2,000. You have to follow our criteria for gamma irons or whatever strategies you use, because some people are going to go, I didn't do gamma irons, Don. I did a risk to a spread. I did a back spread. That's fine. But all we ask is a fair shake. Okay? For $297, we ask you to trade. And the reason that we ask you to trade is we know that some people are going to go through, spend $297. They'll never place a trade and be like, give me my money back. That's not fair. It's not fair to you. It's not fair to us. You got to give this a fair shake. If you're willing to put on 10 trades in the next 3 months, by the way, we will text out more than 10 trades in the next 3 months. But if you're actually willing to follow a couple of trades, if you're not happy after 3 months, we'll give you back the $297. Again, all we ask is they got to be real trades. This ain't paper trading, people. Okay? We want people that want to learn how to trade. And to learn how to trade, I know paper trading sounds enthralling, but you're going to have to actually execute some stuff. And we're going to hold your hand, and we're going to help you do that. So tonight, we make it a completely riskless trade. If you're not happy, we give you back your $297. Listen, get into TheoTrade now. We're going to work with you directly. There are 30 spots tonight on the riskless trade deal. And I'll tell you right now, 30 spots and only 30 spots. We have to reconcile people's trades, okay? And I just want you to understand, okay, if you do 10 trades in the next 3 months, okay, there are 30 spots in here. You see how quickly this starts to add up the number of trades? So tonight, we do 30 riskless spots, okay? We give you unlimited email mentoring. Send us your trades. And the 297 riskless offer, it's never been available for with Gamma Irons Plus. You get the live spring into action, tools to spot explosive moves course. So I'm going to give you the address again, the web address once again, but I'm also going to introduce you a little bit to TheoTrade. So if you want to go to TheoTrade.com, TheoTrade.com/gamma. That's G as in George, A as in Apple, M as in Mom, M as in Mom, A as in Apple. So it's TheoTrade.com/gamma. In fact, I'll pop over there right now just to actually show you the enrollment page. So it's TheoTrade.com/gamma. If you need to contact us right now, you can hit us in the Q&A on GoToWebinar, but we're also right here to be able to answer questions. One of the things that I wanted to display to you though, okay, in enrolling for TheoTrade is this. When you click add to cart, okay, and I'm probably going to reiterate this 10 different times because people constantly ask this. When you click add to cart, you can pay $297 right now, or you can do 2 payments of $149. But the most important thing, and the reason that I bring this screen up here, is to show you it's a one-time payment. This is not, again, is not a reoccurring. This is not like a gym membership that you sign up for $297. You're like, how do I get out? You're like, I can't get out of the gym. I can't get out. You have to show up at the gym. You have to like give them a pint of blood before you can actually get out of the membership. Listen, we here at TheoTrade don't like that. So we assume that you don't like that, and we just don't do that. So it's $297 for the next 3 months. And if you love us, please, we ask you, sign up again. Okay, and if you don't, we give you $297 back, and that's important to us. By the way, this is TheoTrade. When I say this is TheoTrade, this is TheoTrade. And tonight there was actually a webcast that was live. Okay, this is actually the DVR version of it. This is the recording of it, but there was a class that was done live tonight. It was called How to Find and Use Insider Trading Data with Brandon Chapman. So Brandon actually did a class, and you can see they just ended seconds ago, like literally. Okay, is he done actually yet? Hold on. Okay, is he done? Okay, he is done. He just ended literally seconds ago. But this class was just done. Okay, a moment ago. So, and by the way, I'm going to answer all your questions here in a moment because I see questions that are actually popping in right now. So bear with me on that particular front. So this is TheoTrade. This is what the chat room looks like. We're broadcasting live, and then down below you get to talk to us. And there are literally thousands and thousands of people in here every single day. Okay, again, there's over 6,000 people. The next thing, so that's what TheoTrade looks like, and we're going to broadcast in there 6 hours a day. The Start Here menu. I say Start Here because people that come in here and they're brand new, they're like, I am totally freaked out. This is overwhelming. I don't care so much about 95 classes. Where do I get started? How about here? Start Here. Options 101, Options 201. Okay, it goes on and on. Now, if you think you're experienced, I want to show you something about experience. You want to see experience? Come over here to order execution. Every one of you needs to see that 3-part series. Why? The most experienced trader in here. It'll just shock you, okay, when I take you through this particular course of order execution. For 15 years I spent in the brokerage business. We will show you everything about stock, options, and futures executions. Executions are how you get filled. We will take you into, in depth, okay, how to actually get better price executions. in every way, shape, or form. Because there's people in here that are like, I'm experienced. I don't need this. Yeah? How about for 297 bucks? If you watch that 3-part series, okay, that's actually going to give you a leg up. There are so many courses in here. And again, people are, oh, it's totally overwhelming. Listen, you got 3 months. And everybody kind of finds a genre of trade. Do you want to see what the class archive looks like? Classes. We have option strategies and option newbie courses, technical analysis, day trading classes, stock classes, bonds classes, futures classes, hedging strategies, trend trading, pairs. We even have, okay, Slim Miller is our trading psychologist in here. And there's actual psychology classes that you can go through as well, because getting inside the head there is big. And then people constantly ask, like, well, what does it look like if you go into the option strategies? Here's all the classes. You want to see what a class looks like? As I said, the most recent course that we put together is Gamma Irons. Gamma Irons, that's the most recent class, okay? Again, I just did it a couple of weeks ago, and it was it's not just a smash hit. It's one of the best classes I've ever put together here at TheoTrade. Cleaned it up. It's ready to go, all right? And you can start to see, by the way, you can start to see probability for the Iron Condor, all right? There's a Q&A session I attached to this. You're going to love it. And you actually click right here to download the entire slide deck. That's how we actually play it. So if you want to see what a class looks like, okay, you're actually watching the Gamma Irons class. All right. I'm drawing on the screen apparently. So the SPX is the beast. Trader beware. And I love showing you guys this because that's what the classes look like. There is nothing in this industry as thorough as what we do here. Now, you think there's a lot of stuff in here. We actually have a search engine built into TheoTrade. You can come over here to member home and you can actually search, type in any genre of trade. Okay, you can type in swing trading. Like there's one of the most prolific classes we ever done was called in-out spreads. So I type in-out spreads and hit search. And every single session that we've ever done here on in-out spreads immediately populates. Okay, you just click on it and it goes right to that course material. All right, so again, it is TheoTrade.com, TheoTrade.com/gamma. I'm going to come back to that in just a second. Again, there are 30 riskless spots. I'm going to answer questions here momentarily. As I said, there are 30 riskless spots. I will read off names, okay? I will read off names to let everybody know who got into the 30 riskless spots. And we had hundreds and hundreds of people on tonight. So what our members are saying, this comes from Brian. And if you don't mind, I blurred out his last name. And I actually took an email here from almost 6 months ago, but it's March 16th. And the reason I picked an email from March 16th is I wanted you to see this. Okay. It says, Don, wow. Okay. I want to again say thank you for what you have taught me in the last 2.5 years. I bought into what you taught about risk twist spreads and duration positions and started to trade options almost a year ago. I missed out on the last market move up, but at the moment my IRA is up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. Thank you again, Brian. And the reason I pull up this particular email, okay, is this. We're in the middle in March 16th. That's almost the absolute bottom of the S&P. The biggest crash, okay, since the Great Depression. This gentleman's actually up almost 15% on a year-to-date basis in his IRA. That's the kind of emails that do it for me. Here's another one. This one comes from Todd Summerall. Todd said, go ahead, use the email. This one says, hey, Don, don't know if you remember, but I emailed you a few weeks ago and you told me my delta was positive a couple thousand or more. A couple thou or more means a few thousand or more. You told me to smash it or I'd be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before TheoTrade, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. Well, I am Todd, so thank you very much. And I bring this one up because this isn't about, somebody that made a ton of money. This is about somebody that you just saved their life savings. Because I'll tell you right now, you email me and you ask me a definitive question, I'm going to give you a definitive answer. And that's important to me. And I told this guy, I'm like, you don't get out of these positions right now. You're done. You're gone. Okay. And we saved his account. Listen, this is everything that you get to access tonight, right? It's $297. So you get the Gamma Irons course. You get 3 months access to TheoStream, which has a trading room that we're in for 6 hours a day. We literally broadcast from bell to bell. Everything's archived. You know what? Not everybody can watch 6 hours a day. We get that. We totally get it. You can actually watch on your mobile device, and you can even speed it up. So if you wanted to watch like an hour in 30 minutes, you can do so. We can actually have 2 times, even 3 times the speed. I sound like a chipmunk, but it's awesome. We have text and push notifications, trading indicators and scans, daily coaching sessions. The second bonus is all 95 classes that we have. Okay, I mean, we're giving you access to literally every single course that we had from day one. The third bonus, of course, there's a live class coming up. I mean, people, you pay $500 every single time you go to a class. We charge $297 for the next 3 months to access every single class. And I'll put up our education will smoke anything in this industry at any price. Somebody inevitably says, I paid $30,000 for my education in the marketplace. What you're going to get here at $297, you're not just going to be blown away. There is nothing comparable, okay, at any price to what we do here at TheoTrade. People, that's why we have 6,000 clientele that are now accessing TheoTrade on a day-to-day basis. So again, it's theotrade.com/gamma. What our members are saying, I learned more in the past 4 weeks managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned, okay, would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe from Chris. Again, go to theotrade.com/gamma. Follow me to the link for the SPX expected move indicator. I wanted to reiterate that to you. As you guys are actually enrolling for this, okay, those of you, when you're enrolling, fantastic, you click add to cart. Others of you, the SPX expected move indicator is right down here on the bottom of the page. And again, I want to reiterate this particular page is theotrade.com/gamma. If you need to get a hold of us, we're here. You can click right on this chat if you had a question, or you could just chat into the box over here. I'm going to answer some general questions, then we're going to get specific. By the way, again, all you have to do enroll tonight. There's 30 riskless trade spots left. I can tell you right now, a bunch of people are enrolling for it. There's not 30 riskless spots. It takes me, okay, and I'm looking right now in real time, but it takes me about 4 to 5 minutes before I see you enrolled. Okay, so right now, and I'm just glancing at the screen, and I will read off, and I promise I will read off every single name. Okay, as I said, it takes me 4 or 5 minutes. There's about 12 or 13 people that have already enrolled here, and I'll read those off here momentarily. Before I do that, again, it's theotrade.com/gamma. Let me answer a couple of general questions, then we're going to get really, really specific. By the way, a couple of names just popped up, so I don't have all of them right now, but Rob M. from Virginia, Art H. from California, Devang V. from Texas, Manjo, I'm going to butcher this name, Manoj S. from Texas. Manoj, I really hope I got your name correct. Scott B. from Pennsylvania, Francis D. from New York, Trevor A. from New York, Alan H. from Missouri. Those are the first few that have actually come through. You're all on there. First of all, I want to thank you, and you're all in for the riskless spots in here. So let me answer some generalized questions. Again, I put the web address down here because somebody just asked that. It's theotrade.com/gamma. Some generalized questions, then we'll get specific. People always ask me like kind of what we need to get started at TheoTrade. You can have a laptop. You know what? You can have an iPad now. You can have an iPad. You can have an Android device. I honestly don't even think you need anymore a laptop, only because mobile has gotten that good and you need an internet connection. I mean, one thing that I think I've reiterated a few times tonight, and I just want to hammer home, we are going to try to provide everything that you need to get started, from novice to absolute expert, the most extreme traders. If there is something that you need in this business, tell us. We want to know. Like, that's what we're about here. I mean, listen, we have 8 full-time instructors, okay? Everybody's answering emails. We're going to support you in any way possible. If you need something, if you have a question, okay, let us know. All right, second thing, this is not a membership. We do not auto renew or bill you again. You pay $297. If you want to do it again 3 months later, you have to tell us, and it's another $297. It's not an introductory. We don't do any of that crap. I hope you guys get that about us, right? We're now providing Gamma Irons weekly updates. Okay, The Gamma Irons are being updated now on a weekly basis. We have actual weekly videos so you can follow all the moves that we make. So not only are we giving you all the education at TheoTrade, giving you all the trades, we're actually doing a weekly video, and we do this every Friday specifically, and we say like, all right, okay, here's the trade that I set up a couple of weeks ago, and you kind of follow along, and it gives you a lot of insight. It's not just a text that comes out to you, right? It's literally following and holding my hand into every single trade in a weekly video that talks about the management. Number 4, we archive everything. We get that you can't watch 24/7. I mean, we broadcast live minimum of 6 hours a day plus classes. Some of the classes, are coming on the weekend. Some of the classes, listen, we archive everything. So if you miss something, you can play back the archive because we provide you access. You can archive and watch stuff on your computer at home, but you can also access us via TheoTrade Mobile. TheoTrade Mobile is for iOS and it's found on Android. So we have both devices. Okay, if it's an iPad, if it's the Google Play Store, whatever it might be. Okay, one important thing: add your cell phone number when enrolling if you want to receive physical text messages. Okay, you can also download TheoTrade Mobile for push notification. What push is, if you download our app and your app is in the phone, it'll say, do you want push notifications? And when we do a trade, it'll just go bing, it'll pop up inside your phone. It's not even a text message, it's push notification. Number 7, you can email us anytime. You're going to receive a response within 24 hours. That includes trade-related questions. So if you ask me like, hey, this is my portfolio, what do you think? I go, oh, you're dead meat. That thing is hideous. Listen, you're paying, okay, $297. Use it. And I encourage people to email me. I spend 4 to 5 hours every single day answering emails. I don't mind doing that. I mean, it's like the lifeblood of what we do here at TheoTrade. So that's important to us. Okay. Number 8, you're going to gain access to every course we've done in the previous 4 years. Every class, every coaching session, every live trading session. All archives are searchable. Okay. Name a trading topic, and we have an archive on it. All the trades that we do here at TheoTrade can be done inside an IRA, retirement account, with as little as $2,000. And okay, we at TheoTrade can help you get approved for options trading at several major brokers. So some people say like, I want to trade options, but they won't let me trade options. Okay, we can get you to trade options. It's okay. Remember, there's 30 riskless spots available tonight. So that literally is 30 riskless spots. And we do that to incentivize you, but we got to look through people's trades. There's only, 8 of us. We look through every single trade. We reconcile the trades. Listen, get results, take action. Enroll for TheoTrade now. There's absolutely no risk to you. Now, I'm actually going to cruise back and I'm going to answer questions directly from the chat room. I know a lot of you are enrolling right now. I will read off, okay, some of the other names that are enrolling right now. And we'll go from there. It's theotrade.com/gamma. Let me take you back over here to the enrollment. Okay, I will pop the web address back up in here again. We now have let me read off a couple more names are actually popping through right now. I'll read those off and then I'm going to answer your specific questions. So Arthur F from California, Daniel L from Connecticut, Greg M from Washington, Paul A from Texas, Heather C from California, Andreas T from Colorado, Joshua H from Oklahoma, Dang B from Nevada, Matt M from Maine, Ranga G from Texas. All right, I think I got those. Are again, the names take me about 4 or 5 minutes to actually see. Okay, you're all enrolled, by the way. Thank you, and you're all enrolled under the riskless deal here at TheoTrade. So let me answer some of the questions that are coming out of the room. All right, first question comes: do you give criteria to enter these trades in your courses? Absolutely. So every course that we put together has a very structured curriculum. We're usually teaching what the trade is, okay? And then we're actually teaching step-by-step criteria. And when I say step-by-step criteria, I mean literally my course is step 1, step 2, step 3, step 4. Then we have a Cliff Note version of it at the back of the class. The most important thing though about these trades, I'll be really frank with you, it's not about the entry criteria, it's about the exit. The exit of some of these classes is rather critical. That's the part that a lot of people, they miss that. Okay, they miss the fact that the class is, it's not just about an entry criteria. Okay, anybody can get into a gamma iron condor. It's knowing how to get out. It's knowing how to approach the trades the right way. Okay. All right. Oh, I like this one. How do you manage a trade going against you? What's your stop out point? Okay. One thing that you will never see me use in any of the option trades is a stop order. Okay. We'll talk and in each one of the courses. By the way, that's an incredibly difficult question to answer, because how do we manage a trade going against us? Depends on the type of trade. There are trades that we will absolutely defend with our life, and then there are trades we just be like, hey, it's part of the business. Don't worry about it. Let it go. Let the trade go. Because you're not going to see the use of a lot of stop orders here, because the trades that we're creating are defined risk. Okay? And the edge in the trade isn't just about being defined risk. We're finding definitive edge based in things like volatility. All right. By the way, somebody said, could you please put the link in here for me? If you guys could grab that one. It is TheoTrade.com/gamma. TheoTrade.com/gamma. I'm going to have somebody actually pop the link in there. All right. Okay, next question on the docket over here. Oh, I love this one. Will said, do you provide the chart setup instructions? Yeah, absolutely, Will. By the way, I am not. I'm much more of a quantitative trader, Will. Our other instructors are much more technical analysis. I don't want you guys to think that we're not into charts. Quite the contrary. I set out, when building TheoTrade, I set out to find traders as far away from me in terms of genre of trade as humanly possible. Okay. I mean, I was poking fun earlier at like charts. Jeff Bierman is one of the best market technicians pretty much out there. Okay. Corey Rosenblum is phenomenal swing trader. I mean, Slim Miller, the guy has forgotten more about cyclical analysis than most people are ever going to know. All right. Again, they're CMTs. What do you think CMT is? Okay. It's chartered market technician. These are market technicians, and that's okay. I am good with that. Okay. By the way, somebody was asking again where the SPX indicator is. It's right towards the bottom of the screen. SPX expected move indicator. It's right towards the bottom of the screen over here. Gotcha. I gotcha on that one. All right. Let me continue on with a couple more questions. All right. Oh, York actually asked. So the probability varies, I suppose. How's it figured? So we have actually a little calculation that's taught in the class. Okay, there's a little calculation that takes 2 seconds to do that gives you the perfect, if you will, probability for these gamma irons, and we'll actually walk you through that. All right. Mike actually said, do you ever leg into the gamma iron? No, we never leg gamma irons. Legging means you get into like the call spread and then you get into the put spread, or vice versa, or you buy the call, sell the call, buy the put. We do not ever leg gamma irons. There's no reason to. It'll actually blow up the consistency of the trade. This is actually a trade based on an implied volatility edge, so there's no reason. People that leg are trying to take a directional bias. We're trying to take directional bias out of the trade, Mike. So this is a vertical debit on both sides of the expected move. It is a vertical debit. It is on both sides, both a call and put. It is not necessarily on the edge of the expected move. It's not. I taught the class this evening on the edge of the expected move because I think it simplifies it, but it's not necessarily on the edge of the expected move, because what I did tonight was showing you weekly expected moves. We're going to differentiate in the class. We found more edge, okay, in a little bit of a different way. All right. We usually associate gamma trading with briefly held positions into expiration. Okay, so what's the typical holding period of these trades? These trades, okay, these gamma irons, gamma, people always associate with people associate gamma in the last week of expiration, but that is actually often negative gamma. These trades are a little bit further out in time. That's all I can tell you, man. That's all I can tell you. But the gamma iron, the explosive nature of gamma obviously does kick in that last, 7 to 10 days prior to expiration. All right, so by the way, there's a few more names that are going to come through here over here momentarily. I am just making sure that everybody has their questions answered. Okay, so somebody said, should I have $2,000 in my account? Listen, you can become a member with less than $2,000. Like you can join TheoTrade with less than $2,000 in your account. But I don't mind telling people, like, listen, if you're joining with less than $2,000, it is going to be a little bit limiting in what you can do. But at the same time, hey, at least when you get the 2 grand, you'll have the knowledge behind you to be able to trade. And that in very large part, I think that's worthwhile as well. Okay, a couple more names are coming through over here. Make sure. I think I mentioned one of these here a moment ago. Make sure I did not reiterate the same name. Okay. Oh, there's a Scott B from Virginia, William W from New York, Earl C from Minnesota, Mark A from New Jersey, Robert H from Mississippi. Okay. Sorry about that. There was 2 Scott B's in here. By the way, I have read off. There's only a handful. We're in the upper 20s now. There's only a handful of the 30 riskless spots left. Let's see if I didn't catch any questions over here. Um, Again, the questions about the charts, those are going to be easy ones. I think I got pretty much everybody in here. All right. By the way, again, the Gamma Iron course, I'm telling you, you guys are absolutely going to love it. But more importantly, more appropriately, so it's Wednesday night. I kick off almost every single trading day. I come live at 9:22 Eastern Time is when we go live, and I kick off the first hour almost every single day here at TheoTrade. I get up super early. I'm in Pacific Time. I live in Arizona, so I'm on Pacific Time. I get up super early. We kick off at 6:22 a.m. Pacific Time. Join us in the chat room first thing in the morning. I mean, listen, it's great. We have 30, 40 new members coming in here almost on a day-to-day basis. We appreciate it, and we're going to help you in any way, shape, or form. Feel free to email us. Just go, remember, support@theotrade.com. I want to reiterate that. I apologize for cutting it off at the top of your screen. Support@theotrade.com. If you ever need to get a hold of me, go to support@theotrade.com. It'll get to me. Just put, I need to talk to Don, and it'll get to me. Again, this is theotrade.com/gamma. I want to thank each and every one of you for attending tonight. Have a wonderful evening. Bye-bye.